Good morning, Vietnam. All right. Good morning to all you that are just coming in. Sorry for the low start. I'm just trying to get this all set up. And we are market open with a little bit of a sell-off. I'm not going to be looking at it exactly at this moment. I'm just fixing a few YouTube things, which is what delayed me. So sorry about that. Yeah, I thought I had a few extra minutes, but Photoshop didn't love me. You can see the new thumbnail on the left-hand side there. I think that will get us the latest. All right, and took up the whole screen. I'm stealing the diamond hands. Okay, and then that goes here to cover up the other crap that you don't need. All right. That was the one I was working on. The font sucks on it, but it'll do. All right. We are ready to rock. Yep. Oh, I love it too. I love the diamond hands. It's so good. Yeah. And it's horrible. It's actually, I just threw my my avatar photo I use for business stuff on there, and I just quickly erased it, and the neck kind of fits, even though it's like a 2-second eraser job. Oh, holy crap, the whole market is blood red. Oof. Red. Look at that drop. Almost 0.5% drop. Eek. Well, good thing I have those options. Oof. Yeah, no, it's not looking good. It's looking really bad, actually. I hope this cleans up. And fuck GME. Alright. Let me just fix up the title here. Alright. I'm gonna use our branding. Live AMC Stock day trading. Now I just need to use keywords. Squeeze is a lie. Util doesn't matter. And what else is the other bullshit that they're going on about? Yeah, I'm going to just actually put utilization, because that's the big one right now that doesn't matter. There, that's a good way to advertise. Okay, utilization doesn't matter. There, I'm going to do some clickbait titles. The squeeze isn't coming. Utilization doesn't matter. Okay. And I can just follow up with "you're stupid," but let's not insult future fans. Okay. Yeah. If you... look at that go. DRUN and okay. I'm gonna just there we go. Excellent. All right, so that was quite a drop. What's that volume? Where do I find volume? It's been a while. It used to just oh, it's because it was blocked. I'm like, the hell's wrong with this thing? Okay, 321. Yeah, that's huge. Considering our opening volume was 10, that's 3 times. Somebody just dropped a big turd nugget, which isn't a good sign, but they probably saw the blood red market. So, man, that's not bad actually. That's a good recovery. Nice S shape. All right. Yeah, we could spring back from this, but normally that kind of crash, you'll have, 3 times longer. So that's what percentage crash? Okay, so that's a 3% crash over 3 minutes. So it'll take at least 10 minutes for us to fully shake that off. So not bad. All right, just catching up on the chat. Nope, no hedge fund manipulation. That shit's not real. The entire market's down. Yeah, yeah. I'm not the only one. I'm just the only vocal one. You ask anybody that does financials, they're not going to be like, "Oh God, Illuminati." No, I acknowledge that there is an ability to manipulate, and people do manipulate. You'd be stupid to say they don't, but it's not like they manipulate on a malicious level. They may push the market around in an effort to get their options to settle properly. They might dump a lot of money to try to spook the market so it goes down and they make more profit on their short sells. That's all valid. I'll give you that. But they're not constantly spending millions and millions of dollars to manipulate the needle. That they can't do. Or, well, they can do, but they'd be friggin' stupid. So, that's where the disconnect is. Yeah, sure, there's a little bit of manipulation, but it's not to the scale or the type described by Reddit and the retards that profit off of them. I do like Wall Street Bets because there's some really solid due diligence there, but of course nobody wants to hear it, right? They just want to hear, am I going to get rich tomorrow? Well, if you're better at what you do, the answer would be yes. I'm just quickly walked away from the computer there. I'm just trying to get a coffee into me. Every other word coming out of my mouth is trying to be a yawn, and I'm like, ugh. Holy crap. Don't know what is wrong with me the last couple days, but I have been incredibly tired. But in a yawny kind of way, not in a sleepy kind of way. And I don't know why. It doesn't really matter. It's more annoying than anything. Looking at the chart, we're still going sideways. Yeah. The first 5 minutes don't really matter anyways. Unless they're a complete plummet. But it looks like we're okay here. We did have an initial plummet. It looks like it's sorted itself out. So then, like regular followers of the channel, the next bit is see how high we can go before we hit the dip. Because then that sets the tone for the rest of the day. If we can't get any height and we go into the dip, then we run the risk of, at worst, a panic sell, depending on how low we start off at and how low we go. At best, we basically are stunted, and it'll take us the rest of the day to climb up to wherever we got stunted to. So it wastes pretty much our entire trading day. At best, the dip doesn't happen. We hit the gas pedal right now, and we essentially climb to the moon until 11, where there'll be a deciding if we slow down or not, and then 12, which is usually the peak, at which time we would stop and profit taking takes over, and then we go to close with a little bit of profit taken. And that's pretty much a stock day summary. Now, let's see what's happening. Nothing. We're going sideways. Is this frozen or is it still moving? Yeah, it's still moving. So right now it looks like it's treading sideways because it's going to crash, but it hasn't got the courage yet to do it, which is bad because once it gets the courage, the previously mentioned thing just happens, which is crashy crash crash, and then we spend the rest of the day trying to recover. But the good news is I made an option and I'm going to make money. Actually, I've already made money. So, ha 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 ha. So, now I'm not feeling so bad that I have to wait a bloody fucking eternity to get my money back. By the time I get my shares back, I will have made myself rich. Okay. Tasty, tasty, delicious cream. When does this expire? It smells like it expired yesterday, but still good. You know, if I've learned anything from stocks, is to YOLO. Just pour in a little bit of clothing detergent, spike that coffee, put some hair on your eyeballs. Good stuff. I do like this taste of Purell in the morning and Purex. A little bit of hand sanitizer just to give it some flavor. A little bit of lemon flavor. Really sharpens the senses. Gives your coffee that extra zing. If you take too much, though, you go blind. But just a little bit of lemon zest is enough to get you where you need to go. All right. Just whip out the dick, give it a stir. Ooh, nice and warm. All right, and back to the computator. There's some people outside my window. That's weird. All right. So it broke through, yeah, as I thought. Yeah, we should have saw more speed, but it was hesitating. So that was pretty much leading up to a crash. as thought it would. Dodge is an extreme forward. You mean fraud? What word are you looking for? Or feud? As in they're fighting? Eh. Oh, borrowing rate. Yeah, that's a good one in there. I'll put that as a keyword search. Keyword borrowing rate. All right. Good. So, yeah, it looks like it's going to be a crummy day, at least for height. So we basically burned off our push from yesterday. So we created a dome shape, which is the worst kind, but we'll find support back at 935. As long as we don't get back into the 915s and stuff, we should be okay. This is essentially, we went up, and this is our payment for the 9 to 980 run. It's not amazing, but considering the market is totally poop, a little bit of recovery. Yeah, just an early morning poop. Someone took a steamer. Yeah, she looks good. Yeah, it's not too bad actually. The drop was pretty bad. The recovery's pretty good. It's not looking amazing, but the general that velocity is very sharp. The Dow doesn't look too bad. S&P's kind of showing weakness, but also very strong recovery. And the Nasdaq just shrugged it right off and blew through it. So, yeah, I think we're okay. I think this was probably a good point to make a buy. I'm going to put a buy in here. And then see how that goes. And then sell before 10:30, where we'll have our dip. Yeah, I think this, whatever happened overnight or whatever, there was just a big spook across the market. So this doesn't really reflect AMC. It's more of a someone took a turd on the market for whatever reason. Yeah, which is good. As long as it's not us, we can survive. Yeah. The greasy strangler? Are you the Stratton strangler, though? My option expires next Friday. I figured I'm going to be here anyways, and at this rate, Jesus. Yeah. I'm pretty sure we're going to hit 14, but we keep getting, like, well, no, I know we're going to hit 14, but every time you get days like this, it keeps putting off that uprising, right? So I was like, you know what? Fuck it. We're probably going to have a whole bunch of shitty ass days, and it's going to suck. I'll just put it one more week. Yeah, I don't know what's going on about 420, other than it's Hitler's birthday. Happy Hitler's birthday, weed smokers. Every time the weed smokers have a huge party on Parliament Hill, it's just like, wow, look at everybody just celebrating. Oh, keto's awesome. Yeah. If you need to lose weight, ketosis, ketogenics, is the way to do it. The only time ketogenics is not the way to go is if you have a bad liver. That would be what you need to avoid, because it will blow your liver out. Yes, Mr. Irrelevant. Sorry, it took me a second to read it because it's in all caps. So to answer your question, irrelevant. The trade volume would be low if people just buy and hold, yes, because they're not moving anything. They buy once and then they go to sleep. And if there wasn't any shares left to purchase, the stock would actually become very volatile. So there would be less volume. Actually, there'd be zero volume per se, and the share price would fly all over the place like it's having a seizure. But we're nowhere close to that point. We still have 400 million shares to go before we run out of shares to purchase. So, yeah, basically what you're seeing right now is whenever you see low volume, it means a lack of confidence or a lack of intent. Well, actually, the real term is lack of intent. So there's a lack of desire to do anything. There's no intention. So that could mean that they're hesitant, they're waiting, they're not confident. There's a whole host of reasons, but it just means no one's playing because something. And then the whole game is guessing the something. And then that's how you win. So this one looks like it's going to close. Yeah, that was a bad trade. But I'm going to let it run. See if I can redeem myself. I know, Zach. It's almost like I know what I'm doing. And I don't play into the hype. And no problem, Relevant. That's what I'm here for. I'm not a financial advisor, but I'm not a stupid idiot either. So, yeah, it's really hard to get a thinly traded stock unless it's a penny stock or a small company or something that doesn't have many shares. In a company like AMC, it would take Reddit going crazy to basically cause a shortage of shares, which is not the case. I mean, Wanda just put 14 million shares back on the market. You know, you need $14 million times 10, or at the time 14, to buy up all those shares. Did the retail public do that? I don't know. Because I'm not following the numbers that accurately because it doesn't really matter. I could, but it's like, who the hell cares, right? We could look at the float. If the float was like all of a sudden into the tens of millions, I'd be watching it every day because that would be impressive. One large company could tank. But if I look at fintel right now, why this thing's just doing its thing, we have an average of 170 million shares moving each day. And our float right now is 233 million. So then we're technically out of shares every day, which is not true. The shares outstanding are the maximum shares that include the ones that are held by the shareholders and the company insiders. The floating shares indicate the amount of shares that are actually available for trading, right? So unless the float's completely gobbled up, which it's not, then we basically aren't going to have a wiggly market. So, and they're going to put more, what the hell is it called? They're going to put more shares on the market next year. So it's not even a point. So, anyways, looks like we're going to keep going down. All right, I'm going to close this one at a loss. And then I'm going to make a new one in a minute. Yeah, that baby's going to keep going. till the Dow fixes itself. Yeah. There goes the crasheroo. There. And here is the article if you want to learn about the float. So basically, at the end of the day, the stock market's never going to choke, if you will. It's not going to stop. But if for some reason all of that float gets gobbled up by retail investors, then you'll start to see that the bid and the ask will start to become broad. Like right here, see how it went 27 and 29, 28 and 30? That's showing an indication that there's lack of liquidity, right? So that's not a big spread. It's partly probably because we're moving so quickly or something happened and we just got a little glitch. But when this starts distancing by a large amount, then that starts to show that there's less people willing to sell or there's less people willing to buy. So the price basically becomes wide. Generally, it's generally the spread is because there is no one willing to sell. Yeah, that's usually the case. Large spread, because the market maker. Yeah, because it's in the case when there's no market maker, when the market maker doesn't give a crap about your stock and he doesn't hold any, then you have to find a willing seller so you can be a buyer, because there is no free float. It's only what's held by the people. And then you have to find someone, and then you get huge numbers. Right. But when you are in a highly liquid stock like ours, or not a thinly traded stock, there's a dude that sits in the middle that accepts all the trades, and he takes a penny from the sellers and a penny from the buyers until he runs out of shares, because there was too many buyers, and then he has to leave, and then it's up to the sellers to set the price. Yeah, I think I got that one. Yeah, and then when that happens, the price goes all over the fucking place, which could trigger a short squeeze, blah, 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 blah. But we are not anywhere close to that. Imagine it squeezes to $5. Fuck, Zach was right. The CEO of AMC, remember, is also the CEO of AMC. He has to say certain things, right? So if you look at Aron, um, people like him and hate him because there's two sides to the coin, right? Evidently, if he was doing a better job, AMC would not be in this financial difficulties, right? So he made choices that led them down this path. They were inches away from bankruptcy, right? He just paid himself a bitch ton of money. I mean, the guy's no saint, right? But he's obviously not super stupid, or AMC would have collapsed on itself far before now, right? And he managed to negotiate those deals, and now he's really focused on shareholder value, so forth and so forth. But he's got a job to do, right? So he can't say shit about his company. He can't say shit about his failings. He can't acknowledge, any problems he might have. So you can't buy into what a corporate spokesman says, right? So keep that in mind before you start hyping up people. Yeah. It all comes with a grain of salt. I do like it, though, that when the stock goes down, aggressive people come out to play. It's like they got to take their anger somewhere. It's just a number. Just ride it out. It's not that bad. 3% when you're going to make 30% a couple weeks from now or a day from now. Like, just calm your tits. You won't make it in the stock market if you can't get your diamond hands. And you're going to see far worse than -3 in your lifetime. Wait till you get a -70 when you lose 70% of your stock in less than a couple hours. Like, you want shitting your bricks? Oh. Which, that can't happen. We just have to go hit the 1 year. And oh, look, what was that? Let's measure that one. Oh, that was over 80% of your money gone in less than a day. It is more than possible. AMC, not so much, but that's why I'm playing AMC. There's not a big risk that you're going to lose all your money overnight. But if you're going to be a stockbroker or pretend to be one or do it as a hobby, you can't be getting all emotional. It's not the way. Just checking my emails here. All right, good. So, what do you guys think of the new? While we're waiting for this to do its thing, you think of the new graphics? Well, at least you acknowledge my technicals are good. I feel vindicated. My timing is off. That is for sure. My technicals are good, but my timing needs a lot of work. But partly that's me misreading the signals, and a lot of it is also the mystique of the market. It's like, okay, if we keep at this current pace, we will be 5 seconds until, and then the volume bottoms out. You can't predict that, right? And then 2, it's like, okay, I'm a little too optimistic here, or I'm a little too pessimistic here. So I'm reading the signals, but I'm giving it the wrong flavor. So then my timing is off. Because it doesn't move at the speed. But it'll come with time. You can't pressure yourself. It's at least I'm not making multi-million-dollar trades and then fucking bottoming out the stock market and causing a hedge fund to implode because I'm a multi-billionaire Chinese dude that's been banned from the market twice. Oh, curse that Huang guy. Caused AMC to tank back at the 19th. No, when was that? That was the 29th of March. Yeah, fuck. Can't win. If retail investors knew how to pull out, we wouldn't have a lot of teenage pregnancies. Didn't. Nah, if you learn anything, humans work two ways: fight or flight, and all of our options are going to be attacking or running. Defending is a form of attacking. So if you look at anything, you can quickly decide if it's going to be one or the other. So stock market's no different. So a lot of people will attack it. They'll double down. They'll cost average, right? But if they don't know their options are buy more, make it worse, or run away. And so retail investors tend to panic and run because that's the safest option they know. Whereas skilled investors, you're losing money, you just lose more money. You just go after it because you know it will turn around. So you take your time and your opportunities to attack the problem because you have tools. You're a monkey that knows how to use tools. So with that in mind, red days run the risk, especially when they're heavily run by retail investors. They run the risk of a panic or a rout. We're not seeing that right now. I don't see any panic. You can see the volume's not high. There was that one little big sell-off there, but that was all at once. So that's a large fish making a splash, which is probably that person that keeps showing up. We have somebody or something that trades about 17,000 shares at a time and basically causes a splash everywhere they go because they're just dumping them. Their total content looks like it might be about 500,000 shares they have. So they're moving those around and splashing all over the place. So I don't know who that is, but somebody's making a mess of things. So that could be that person because they're active investing, so they're buying low and they're selling at peaks, but they don't seem to be that good because when they're selling off, it tends to be after they're losing money. So they're not selling on the way up. They're selling it after it clearly shows that they're wrong or it's done. Where a good investor or great investor, I should say, would know it's going to finish and sell just before it turns. But that takes balls of steel and skill that most people don't have. Because that shit's hard. And a lot of it's luck because there's no way you could know. But anyways, let's get some lemons and let's get a trend line here because we okay, I just want to put a trend line on this guy here. There's a clearly defined slope here. So where is 1230? Okay, that's where our dip should be. Sideways, sideways. So that made a dome shape and collapsed. So normally when you get a dome shape, this would go out a little bit further, but it didn't. But as soon as you crest, so when I say crest, it's when you hit the apex or the apogee of the cycle here. Once you crest, you run the risk, cresting is the edge here, sorry. That's the peak or the apogee. The cresting is when you start to go from being horizontal to the right, sorry. The whole thing I call cresting sometimes, but actually cresting is that. Because peaking is that. And cresting is the edge of when you start to go into the downside. So when you're no longer going up, flat, and the arrow starts doing that. There's your cresting. Anyways, so when you start cresting here, at best, you're going down to here, this guy here. Most likely, you're going to go to here. But because it didn't even get there, it just bottomed out, you ended up breaking new lows because of the speed. And then you saw a quick recovery because that was too low. So that indicates that the Dow, or this is the case the S&P, wants to continue up. So that's good. So even if you get a new low, you're most likely going to see up because it clearly told you that it's tired of being down. But this told you that it doesn't want to be up here. It's too early. So you're going to land somewhere in here before you test if you're going up or you go back down. So here you could short sell, wait till it goes down, then you could buy in, and the second it comes up to about halfway mark, you could sell, or as soon as it crests again, you sell, which is what probably happened here. People bought the dip, and then this large red is them selling on the dip for profit. And then the market buys back in because it's at discount, but the profit takers are gone. And the profit takers might get back in just after they sell, they just buy back in and then, repeat the process, right? Which is why the stock market does this, right? Buy, sell for profit. Buy, sell for profit. So anyways, the good news is long story short, there's indicators it wants to go up. Here, same thing. It crested, broke new lows. Again, the speed matters. But this one's kind of bad because it goes up and it rolls and it goes up, but it doesn't want to make new highs. So now when it rolls, it's going to test the bottom, which it's already hit twice, and it might bust through. So that's dangerous. That I wouldn't touch with a large pull because, yeah, she's probably going to go. And that one matters to us because if it goes, we go. Your post from a while ago, Tom? Yeah, I saw it. I didn't see anything from today, though. I didn't get a notification. I usually do. And we are treading a new bottom as well, which is crappy, but we might be going into a W shape, which would mean we're breaking out, and hopefully we get a little bit of height before we hit that blue line. No. Just checking the Thousandaire Club. Oh, there it is, 16 hours ago. So this is your post on the S&P. Yeah. So I wouldn't say we're overdue for a crash, but definitely a retraction. But based on your graphic, you can see there's 3 times where the market is retracted already to kind of pay for its incline. So if we look at the NASDAQ 100, which is, I believe this one's, NASDAQ 100. So if we take a look at that, go back a month. Okay, let's go back 3 months. Nope, 6 months. Okay, so if we look at the 6 months, right? You've already paid for everything below this line. So you have this guy, right? This is your payment for all of this. And this is all paid for by this guy, right? Whoop. So I have to even go further out. So This is paid by this guy, and so forth. So if we were just to follow this, right? So we're going along. We're up too high, we pay for it. We go up, we pay for it. We go up, we pay for it. We go all the way up, we pay for it. So here it kind of went flat, but this is 100% paid for. It actually went further, right? And as we keep going, paid for. And here, we're probably not going to go lower than 13824 because it's all paid for. We already crashed. If you wanted to sell, you would have sold. So if we go back 5 years, right? Oh, that's where your chart is. So if you go back 5 years, you could say, okay, that's a huge run, right? It needs to be paid for. But if we condense all of this, right, the market is not going to go from here to here, right? If you have a run, so if we look at previous examples, if you have a run that's not well paid for, you may have a period of decline. Now, this is the dot-com bubble, but that's very similar to what's going on right now, right? It's just tons of exuberance. You're tripling the market. The market goes up 300%, but then comes down 75%, which is, nuts. And then here, the market has gone up almost 300%. And so if it crashes, like a real crash, it would go down to 2016 levels. So that would make a little bit of sense too. Here's the support line, probably here. This is where it really went nuts. Yeah. But I think you'll see the same thing like this. There'll be a sudden crash that kicks it off. That will be your indication. The dead cat bounce, and then the roll. So this is the dangerous area. You get a warning, and then you get a little bit of a period. Then that happens. So here, you could have argued that maybe this was it, but then it shouldn't have come back and beat them. So that was not it, nor was that one. So I think we still have a little bit to go. There will be a spike and a crash, and then that will give you your warning signs that a turnaround is coming. This would have been scary for me, but that was the pandemic. So the pandemic could have kicked off a market crash, and it probably would have, but then the government just started dumping money and all that sort of stuff, right? So basically that could have been you could have went to here and did this, right? But I bet you the first stimulus checks came out in May last year, maybe, because that would have been the roll period. So they just started dumping money, and yeah. So I wouldn't bet against the U.S. market, at least not yet, is my analysis on it. But yeah, perhaps I am right, or you're right and I am wrong. We will see. Or it's a combination of both our views. Who knows? Oh, look, a good pair of tits. So if this is, wow, if this is a U shape, we'll go up something like between these lines. Preferably, we would do the opposite of this. So if I do bars pattern, if I do that, so if I take those, can I flip them? Yeah, flipped. Sweet. So I want to see that is ideally what I want to see. If that's going to break down, then it's going to break down basically where we are, which is the corner of the U shape. If it's a W, it'll be a more aggressive return. And there's a likelihood it's a W because we have a lower middle, and we've already started to make like a little mini U here that's about the same size as the other side. And that's usually your indicator of a W, which is a more aggressive upswing. And the W has the same problem as the U. You die at the bottom, the middle, or the top. But once you pass the middle, you generally go to the top without problem. Same thing with the corner. If you don't die at the corner, you generally make it to the middle. So right now we're trying to figure out if we're dying or we're going to go up to the middle. And in this case, the middle would be that longest blue that I've just put up there. And it is undecided. The volume's pretty low, although it's a little bit pushed up by that. So what are we doing here? The volume's decent. It's better than yesterday. Yeah, we're at 7 million. Or we might actually hit 10 million. It's not too bad. So I accidentally deleted that big U, but we would be... I could just draw it here. So if this is the U shape, a really bad one, we are currently right here, approximately. So we went like this versus up. So it could be that the U shape is just getting elongated, because essentially the U shape is a point of change and then a climb of buyers, right? That's what makes the side of a U shape, right? So we're currently trending along the whatever, and we're waiting for the point that's going to kick off, right? And when a U shape collapses, it's the opposite. So basically, it doesn't have the energy to go up, or in other words, something happens that causes people to be negative. So then you have a breakdown. But normally in a U shape, because you have this, right? You have increased sellers. Normally you get the opposite, increased buyers, because the sellers are all done. Now the buyers take over. But if that doesn't happen, the usual breakdown is either the middle, where it doesn't even get to a U shape, or you start to go up and then that's it, and then it collapses because it doesn't have energy. So kind of like this, you start to go up and that's it. All right. So this one's actually kind of interesting. It's going to come down. It's made a W. It started to go up. It failed, but now it looks like it's going to make another W. And then this one might have the energy to actually make it out. But we're coming right up at 10:30, so we're basically going to probably do this and get pulled right back down. It's possible that all the people that were going to dip out at 10:30 already got out because of this and because of, whatever. Ugh, that looks like a pile of spaghetti. Yeah, so we'll see how 10:30 plays out, and that will give us a measurement. But yeah, we're currently right here in the general U shape. Could take a look at that. Yeah, so U number 1 would have probably been, or no, wait, that's the wrong one. That's the big U. Remove drawings. So this is U number 1, and this one failed. So it didn't complete, and it failed. And if we raise it up to here, it failed at the halfway point, which is more accurate. So it's more likely probably this shape. So that's probably U number 1. Then U number 2 is here. So this one goes like this. And then I wanted this to follow this guy and be over here. But yesterday basically told us no. So it recovered yesterday to kind of the baseline, which is this line essentially. We also have a trending line of like worth of the company, which is like say there. So we should hit that line, or that line should pull us up, kind of like that. Plus, whenever we figure out where this U shape is, right, wherever it is, that line should pull us up. And then you can think of it as another way as we're X and we're moving this way because there's no real willingness to really sell out. But we haven't found on the timeline when the buying is going to happen. There could be some timers running in the background, people waiting on money. There's some major events that are about to happen that we don't know. So we're just kind of gliding. But eventually we're going to hit one of these beneficial lines, and basically this downwards is going to be upwards somewhere over here. But so if we remove the drawings so we can see, so yeah, we're basically, this would be the U, and I was hoping that this was the upward shape. This can be ignored, but you know, you can clearly see now something's wrong. So if we go with the bigger U shape, right, we're now basically at the middle piece. If you asked me a couple days ago, we could have been, you know, something like this. But you can see how long this is, right? We're going to need something similar to come out of this. Yeah, but this, I think this is what buggered us. You can ignore this, but it basically changes the slope. If it wasn't there, we could start our recovery from here, right? But because this is here, we could try to start our recovery from here, but then that changes the shape of the, it drags us out a couple of days. Yeah, easier way to show this would probably be an eclipse. Okay, so an easy way to show that is, so if we have a circle, right? So if we're coming down like this, right, we could ramp up, like if we do that, we could have done this, right? But because we have this guy, it drags us out. If we want to fit him in, see how it drags us out? If we ignore him, right, and we ignore this one, then we either have we're going to have a slower comeback. So if we didn't have all of this, we probably would have a quicker comeback. Normally the way it works is that for the distance here, right, which is, I think it was 16 days, so 10 days, you're going to need 10 days or 30 days to recover from a 10-day crash. Although it's not really 10 days, but let's say it's 5 days. So you need 15 days. So have we paid the price yet? Yeah, we're at 26 days. 15 days was, yeah, somewhere around here, which is, yeah, basically where I was saying we should have started to see our recovery. Yeah, but host of things happen, so not yet. So at minimum, if today is not the day, at minimum it's going to be 5 more days, which would put us to April 26th, 25th. And we will see a 50% increase in 5 days. That's best case scenario right there. Worst case scenario probably is going to put us into next month, basically that box. And then next month we get our recovery. Back to 14. So that's worst case. Well, I mean, I guess there's worst case, but realistic worst case. I mean, Adam could go out on a shooting spree you can always have a worse case, but let's keep it realistic. But yeah, if we factor in this guy and this guy, right, we're looking at a longer recovery. Maybe there'll be a spike up, but I'm thinking it's going to probably be more like this. And then if I take this, now I know how to flip it, and we'll be like that. That's what I'm thinking. So we'll just have it'll go up kind of slow. Like even if you do this, right? We could be at that stage where it goes up really slow, and then it goes up. We won't have this huge crash, but if you compare these guys together, they're not too far off, right? There's a lot of exuberance right here, a little bit of pullback, more exuberance, a tiny pullback, pound in the gas pedal, and then this would get ignored, and then you would take off. So, you could even put that one there, and it works out, or you can put that one like this, and so, But I was hoping it would be like this shape, like this. That's what I was looking for. Or like this. It would come up, go up a little. That's too much, too quick. But then it finds its edge, and up it goes. But I'm thinking now we're more likely to be like that with that removed. So actually, I could just build it. Here, I'm going to build it. So I'll do that, and I'll do flipped. So like, let's say this. Actually, that shape usually doesn't exist. So let's do that. There you go. That's more better. More better. And then let's do that. Yeah. So something like that. And flipped. And a crazy bull run. Okay, that pattern doesn't exist ever either, but anyways, you get the idea. So that's kind of what I'm looking at. So, that puts us into May, and that would be a relatively healthy, so if we bring this down to like what you guys are normally looking at, so we just need that kickoff, right? And we need to find our footing. So our main footing will be around the 11, just kind of like this guy here. It would probably look maybe more like this, because the 11's going to be, the 11's going to give us a bunch of trouble. So it probably would be like this. We'd hug at the 11-10, just like we did over here, and then we'd have a bit of a kickoff, and then it would eventually take off. And the reason you don't see this ever, because all this energy and indecision, and then all of a sudden it becomes very decided and goes up, that's usually not the case. It's usually, when it's going down, people don't want to sell. When it's going up, people all pile in. Usually, if it's not a sale. But anyways, I'll look at the chat in a second. But yeah, that's what we're going for here, something like that, just so you can visualize it. Oh, so what you're looking for is on the left-hand side. It's under the long positions and stuff. It's bar patterns. So you just select, it'll copy them, and then you can right-click and you can flip it. You could even mirror it. But it's a good way to, because I draw it all the time for you guys, but it's a good way to mirror something, because in a U shape, it generally is a mirror of the other side. Usually the recovery is slower than the left side if it goes down. Well, it's a U shape, so it's always going to be down. So this usually comes up as stairs, but it's a free fall down, stairs up. That's usually the case. If the U shape is shorter, stubbier, then this will be faster. So if you have something like this where it stares down, but it decides it's going to recover quicker, then you're going to get sharper greens. Or in this case, there was a delay in the middle, so you're going to get larger greens because it's going to make up. It's 5 minutes down and 5 minutes up, but you delayed me, so now I have to make up for it. Anyways, it's just kind of part of the thing, and there's a bunch of psychology behind it, but I don't feel like explaining it every single day we have this, but just keep that in mind. GME is just doing its thing. The Dow is plummeting, S&P is plummeting, NASDAQ is holding, but not so great. Okay. I wonder if we are going to get a breakout soon. This is the 1 year. I don't want the 1 year. Oh, whoops, I'm on the NASDAQ's 6 months. Year to date. Yeah, it's good. So if you remember back in March, this channel's been running for this entire fucking roller coaster, eh? Let's see here. Give me a trend line. Oh, I'll catch up on the chat, sorry, before I do this. Yes, the description of the Thousand Air Club is addiction support. It's how we roll. Okay, so I caught up on the chat. Let's draw some lines. I hate when I select new things. It's always the this one that gets me when I change it. The paintbrush always gets me. Okay, so the lines are here. Okay. Whoa, wrong button or wrong click. So let's do array. So previously we were talking about the pennant that's here basically. So we dodged a crown shape the other day, which was here, right? It's still possible it might exist, but I think we've dodged that one in my books. But we're going into kind of indecision, so you can see the U shape forming, right? Like it could have at any time taken off. You can see it. It's plain as friggin' day right here. But the fact that it's not happening indicates that, other things are happening, right? So you can see there's also wedges here and pennants here. So I'm just going to draw on the chart here to see if I can get a sense of what's going on. Since the stock's just going sideways right now, so we don't really need to pay attention to it. So right now I'm just drawing channels. It looks fancy, but it's not that important. I just want to see the size of the channels. There we go. So you see here, bigger. Here was quick. I could even tighten this one up a little bit. So I could even get that a little tighter there. And this one here, there. And then here, we're going into a point, but we know that the price is erratic, but it's calming down along a point, and the point is where we are right now, around 930, which incidentally is the tops over here, and it's also the point where they stuttered. That's 902. So that's going to be a key point because they crashed, bounce, 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 but this was where they fought it out. So that's like a historical battleground, right? Same thing here. They tried to go up. They stopped here at 923, 930. They broke out, came back down, went under, came back, hit it, couldn't do it, fell, then broke through, then come back, then broke up, and then the rest is our near history. So this line, which is 930, 920, is a very important line, much like 560 if we ever got back there, and 10. 10 is now becoming 1030, 1050. How many times have we been stuck at fucking 1050? Christ. So that's going to be on the way up, another pain in the ass. Anyways, so that being said, let's look at this. So this is the macro wedge. I really don't think there's a wedge here just because, as I've said before, there's too many factors in play. There may be a wedge, though, from the middle point, though, because this is not indecision. This is just way high, coming back down, recovering. There's a U shape here. There's a W shape here. There's a larger U shape here. And this is the roll from the big U shape. Because that was too much, too quick, too high. Sell. But we actually really want to be up here. So then we're trying to get back up. But then, you know, whatever reasons, Wanda and a whole bunch of other stupid things, we can't make it up here anymore. So our only option is to go down. And then that's where we are now, gathering strength to burst back up. So we could be making like a sloppy W. So if we do that, or we do that, that would be the U shape, which would end here. Both of them would end here. So that's 14. Of course. And of course they would end at 14 because that's a key support line. Where is the prophecy button? Prophecy button, where are you? Projection. Projection. Arrow, ray, trend, eraser. Forecast, that's the one I want. So, here we go. This one's useful. So if we take off from here, basically you're looking at a 50% increase in 6 days or a 50% increase in 15 days. So that would be the U, and that would be the crappy W. So, I mean, regardless, almost doubling or having your money, you don't get that from anything in 15 days, right? So I highly doubt the opposite is true. So if it's a crown shape, we would go from here to here. So you'd lose 41% of your money in the next 10 days if that's the case. Oh, hey, look who it is. It's etc. Yeah, I made my first option trade yesterday. I finally got the confidence slash getting it all ready. I'm just doing a little bit of a longer look at the stock right now, just to reassess where we are. Just looking at the channels, because I know this isn't real, so I should actually just do this. Yeah, because that's misleading. And so if I whoop, it's essentially going to be the same anyways. Oh my god. I don't want that one. I want this one. Oh, fuck right off, buddy. I'm not your buddy, guy. I'm not your friend, buddy. Okay, there we go. And here. Okay, there we go. That's better. And this one would be here. And actually, I'll take this one. Click. Oh my god. And I'll put that one there, just so it clips properly. Okay. So that's our channel. If everything was bad and stayed bad, we would have went down this channel, which you can see these reds are basically in it. So it would have been like this, a really tight channel into oblivion, whatever. Things changed. That's not the case. And so we broke from this channel and we ended up into this channel, which then follows these two lines. And that one is now coming into a point. And we know that there is indecision here. We go up, we go down, we go up, we go down. So that's a wedge, right? That's a definite wedge. So if we tighten this up, we have a definite wedge that's forming since March 24th. And we had multiple wedges in here that completed. If we switch from the daily and go to the 4 hours, there was wedges with breakdowns, breakups. This was a breakdown as well. This was a larger wedge from here to here and here. You bring this bottom up. If you bring the bottom up, where's the other? Oh, there it is. So if you bring the bottom up to here and here, then there's your breakdown. But when we're looking over the course of time, it doesn't want to. It's basically just flirting over this line. So that's completed. These are all completed. There is still a trend here, but we broke through that. So we should have had our breakout for this one, and we didn't. So now we're basically trending on something like this. So somewhere around probably this. It's where we are right now. But that, it has a new bottom. So the good news is we're far enough away from this bottom that we're not going to collapse on ourselves. Because when you break new lows, right, you get a kick down. And right now we're being supported by over here. You get boosted in the wrong direction. Let's take a look at a different time frame. We look at the 1 hours. Yeah, so we're definitely got a wedge going here. But I would have taken that wedge from maybe here or here. Because we had decision, right? We knew what we were doing when we were crashing, right? We didn't agree with it, but the public knew what they were doing. They recovered, they know what they're doing. And in this point is when they don't know what they're doing. They're like, I don't know if I should be buying or selling. Volume takes a huge hit, right? It's not as big as any of this. It starts going down. They don't know. This is all slow as shit. You know, there's a few outliers, but if we average them out, the general idea is here along this line at 970 to 931 that we don't really know what we're doing. So lately we've been trending a little bit lower, which is why, of course, this line shows a decline. But I think ultimately this is our guiding line right here, the red. But we're just trending below it right now, which is not good. But it means as soon as things lighten up, we'll bounce right back up to 10 ish, which is what we saw a couple days ago when we keep fighting around that number, right? Because we want to be there. So at least we're at no risk of going into the shitters unless we go down any lower. And then let's take a look if there's some type of maybe short-term wedge breakout we might get. Because the slanting roof does lead us up. So what's today? So that's the 26th. Is the likely, if we keep where we are, the likelihood of breaking out increases by the 26th, which lines up nicely with these guys, right? If that's where we want to go, somewhere up here, that would line up with a nice U shape. If we do that, yeah. Oh, failure. Failure. Yeah, that's why I like the projection, because it gives it a nice curve. So if we do that, tighten this up, so then there's your wedge shape. So we might even still have a little bit more down to go. Or, you know, if everything's great, we might even just break out the top, right? So, not too bad. And at the very least, if we start looking closer, right, we have a really tight wedge right here. So that one gives us a breakout by the 26th as well, because that's basically the same angle. Not much changed. So this one gives us a little bit of a lighter angle. This one gives us a slightly tighter angle, if I get this right. Yeah. So that's the 22nd. Let me zoom in. Let me get this real tight. That right there. That is right there. So that gives us a breakout by the 23rd, 22nd. But at this point, you'd probably break out early 22nd, just because you can't. It's too tight. But if we go any lower today, we're going to push this this red line here down, and we're going to lose our this guy here. So we're going to lose our floor. Although technically we already dipped lower, so something around like that. This black. Make this straight. Same thing. Okay, so that's my guess. And so wherever that's going to happen, let's move that to here. And so we're looking at that. Let's zoom out and see what that looks like. Yeah. Yeah, I can see that. Yeah. I mean, that's a little tight. So in the next 4 days, we go up 50%. But that's looking pretty good. Oh, sorry, not 4 days. Sorry. In the next 6 days, we go up 50%, or the next 15 days. So this is a 10-day difference, basically. Yeah, okay. So we're going to see something happen real soon. We're either going to go down, or in 10 days or less, we're going to go up. And that's about right. We've spent, how long have we been in this shit? We've spent 26 days basically in this shit with 2 attempted breakouts, but this one doesn't really count. This is probably an attempted breakout. This is just the bounce, and the cat is dead. And then this is like, we don't believe in dead cats. Huzzah! And no, the kitty's dead. Yeah. But yeah, and then that plays into those U-shapes, if you remember the drawing. Because, yeah, I want a U-shape that's like this, right? So we're still kind of on track. Like, we could. It's not that hard. We just need to get back up to 984. But keeping with this pendant or wedge, if we did get up to 984, we'd also be on a breakout. So I think those two, there's 2 things, and they're both saying the same thing, because there's something there, right? They're both hinting on the same thing, because there's obviously something there. Yeah. Yeah. The question is it going to be here, or is it going to be here? Or worse, is it going to be down here before it goes up? But yeah, because I was hoping it would have been here. So we would have a U shape like this, or like this. Like this would have been our recovery to 12, right? or a recovery to 11. So I was hoping we'd get a U shape, but we broke down basically at the halfway mark because whatever, we didn't get enough energy, right? So that's not bad, but just like when we do a U shape like this and we start to see it roll, it can still do this, right? But it has to do that in a short period of time. So this is now 5 days. Not very much a short period of time, but it's getting this is probably about its maximum. So if we don't get our recovery today, then this is not going to happen, and we're going to do that. So yeah. Interesting. But yeah. Now, if we do a really conservative, so in 3 days, we'll be up 20%, and that will be the first jump to complete the U shape here. And you can see that. That's more than reasonable. The first thing we're going to see is a W, which is probably going to be in the next 1 day and 30 minutes. And that will complete this guy. And then that will get extended to complete this guy with an extra day. So the first day is here, the second day is here, and then we speed up, and 3 days later we're up here. Yeah, I think that's what's going to happen. So then the long story short of that, it's going to look like this, and then it'll go like that. Because you'll have to pay for this height, so there'll have to be some type of retraction when there'll be profit taking probably here or here, and so there'll be a downwards something that will cost us, a tiny bit of time, but the overall inflection will still be this curve. And no matter how you slice it, that looks proper. If we zoom out, it's basically one of these, right? This doesn't count. This is Reddit, right? But see, it's the same as this, right? It's just a big version of this. Actually, I wonder here. Oh, no. I want to do this. Aha. Ha ha. Ho ho. As the French would say. Okay. Yep, come on. It's pretty much the same. So if we just adjust this, there we go. So that's a little steeper, but you can see how quickly it can take off, right? So when this takes off, it's going to just blast up. But so if we put this like here, right? So it looks bad, and then it just goes whoom, and off it goes, right? So that one's more natural. That is a real bull run versus when I flip this side, right? Because this one has a huge dip, which is not natural. Natural is more like this, right? Versus a dip. But if I put this guy and this guy together, you can see like this little bump, same as this little bump. This guy, we crashed a little because we're just going too long. But yeah, this is what we're looking for. And there's that retraction I was talking about. So if you go up, but you got to pay for it, right? So there you go. That's better than me trying to just draw it and explain it. That's historically what has happened, and that's what happens all the time in every stock. It'll just be a different shape, but that's the and then that's the worst thing that could ever happen is this shape. You never want to see that shape. That's the scary shape. But this looked like shark teeth. So I need to draw a shark. Or a really angry pumpkin. Angry pumpkin! Yeah. All right, so let's take a look at the bigger market. So it's 11 o'clock, and we basically have gone nowhere with AMC. We've gone up a little bit, but nothing. GME, nothing. S&P, pretty much nothing, pretty much nothing. Balls. Yeah. So this is the 30-minute, not the 1 minute, but we're basically just in a bump. As long as we don't go below the 923, we should be okay. Well, sorry, we're below 923, but the actual number is 911, 915. But what I meant by that is, yeah, we don't want to break this guy right here where my cursor is. We did go under it, but we don't want to start trending down that way, because then these people that bought in are going to get out. So this sell-off that we had in the morning is probably all of these people getting out, just like all of this at the top were these people here that got out, and then this here is these people here. So we have a little bit of support from these guys. They haven't been threatened yet, but if this red line starts to come down, right, it's going to threaten these people and they're going to sell. So that's what we don't want to see. That's why when you have continuous green after green after green, everything just gets better and better, because nobody's, scared, right? But when the ceiling starts coming down, then, these people all bailed, so we don't have to worry about these people. They're gone. But these people started our recovery. And so they're the ones that stopped us from going any further. Well, if this line, which is getting closer, crushes them, then we're going to start here and we're going to go into a new run. And then we're going to start threatening these people, right? All of these guys. We don't want to lose these people, because then we're back to here, right? And then if we threaten this, we're back to here. So then we're going 4 and 3, right? But that's, those are the stairs, or the grim stairs down. But it'll take a lot for all of this to happen. Like a lot. But that is what would happen if things get worse. So we just want to not even start that. So we just want to hopefully hope it stays up then 5 cents higher. Just keeps us, if we finish the day at 927 or 945, that would be fine. Preferably we're back at 970 or higher, or even 10 by the end of the day. If we can do 10, then we've completed this shape. So right now we're going to probably do another U shape. But yeah, I would like to see a V. That would be nice, but I don't think we're going to get it. So let's see what the minute chart says. I spend most of my time in the minute chart, so I'm much better at reading the minutes than I am the 30s. So we basically went down, tried to do a U-shape, failed at the 50% mark. Or it was the double W thing, if you remember. So there's a W right here, which did 100%. So this corner and this corner, that's 100% of a W. But the larger U shape, when it swung out, the fact that it completed the W and the fact that it was the 50% of the U shape, the combination of them killed it. That one actually is pretty easy to see, because that's a resistance line, the middle. So when you come up to it, you're going to get resistance from the peak of the middle of the larger W. And then that's why the 50% mark is usually where a W forms. So you get something like this. The reason this formed in the first place is probably something out here. But then when you come back up, that's why it dies here, because it hits a resistance line. And so off it goes, right? So whatever caused this to happen is the same thing. It's just all one line, right? So if it couldn't go up this time, is it going to go up this time? No. Or yes, right? And if it's yes, it gets a boost, which usually gets it up to the top, right? That's how it all works. It all works. Makes sense? So that failed, rolled. It did actually gain a little bit of ground, so a little bit higher. like 4 cents extra. So there was a little bit of energy, and then nope, it crested, collapsed, broke new grounds, and then you see when it broke this, it sped up. So it went down, and then it boosted, and then it fell. Now we're slowly climbing up. So now we're slowly erasing this damage. And if we just keep slowly climbing up, we'd be in a check mark, a really slow-mo check mark, which is this. And that will go till here or here. Yeah, or more here. Or if we're really lucky, here. But I highly doubt we will travel in a straight line for the next 30 minutes. It is 11 o'clock. We just passed it, so the next time thing is 12. So we could technically travel in a straight line till 12, but I've never really seen AMC do that. So the volume is pretty decent. We had a ramping of volume, no sellers. Yeah, it's starting to look healthier. You know, this was garbage volume, right? But now you can see they're starting to get big again. They're starting to get a little bit more weight. So that's showing confidence or decision. And although it's not straight up, it's definitely strong confidence that we're going certain way. Now that would be dangerous here, right? But see, this was cresting, starting, and it broke a support line. So of course the confidence goes right through the roof for the sellers because it's breaking a line of support or resistance, depending which way you're going, right? So that's explained right there. That makes a lot of sense. And a lot of this big red right here is the buyers stopping because it gone too low. So there's a support line here at 910 as well, which we know because we just looked at it like 5 minutes ago, right? 910 is a major support line from back in February. Yeah, I think that was February. Okay, so we're on track. Everything is normal. So this sell-off in the morning was basically because the market is almost it's almost 1%. You know, the Nasdaq is not having it. That is about as bad as it gets. Right? It's falling. You tried to stop it. You get your hands cut off. Your fingers are gone. Oh, GME is going and it's stopping at its 156 support line. Yeah, that's a bit of a support line. You can see how it stopped here, 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 here. Yeah. The next major one is 153. 153, and then it bounces, or it's going to drop to 144. And the problem with GME, just like the Dow, if they go plummeting, they take us with them, right? So we're doing okay. But yeah, it's getting kind of risky. So we're starting to go sideways. Okay, the Dow's stopped. S&P is stopped. Nasdaq. Yeah, the overall Nasdaq is balls. But this overall Nasdaq's delayed right here. So it's probably rebounded. It's probably right here right now. Let me check. Yeah, it's right here. It hasn't stopped yet. So ignore this chart. Because it's going to probably do this. So this is just the top 100 Nasdaqs. This is real time. So yeah, we pretty much went down with the Dow, eh? So we stopped at 1045 and the Dow stopped at 1053. So we started recovering before the Dow did. Oh, yeah, there it is. So this is us going down, and then we started our recovery here, and then the Dow went some more. But we were already on our way up. Now this is kind of odd. Why the sell-off here? GME's plummeting. 1, 2, 3, 4. So this one, I don't know why this curve happened. Could be that we're trying to make a W. Well, I mean, we're not trying, it just happens, but because this is not the 50% mark, is it? Oh, yeah, maybe. Maybe it's the 50% mark of... Yeah, it is. So that's the 50% mark of this. This isn't really a good shoulder, but you can see it goes down, stops for a second. That's a really shitty shoulder. Yeah. And his 920 is probably a number somewhere. Let's go take a look. But you actually, no, it wouldn't. If 920 was a... Oh, it is. Yeah, you can see it. If 920 was a number, there would be more. But you can see it hits the ceiling here and here. It hits the ceiling here. And it's supported here and here and here. So there's a support line right here at 920. That's what's going on. So it blew right through it. But there's, yeah, 919. Actually, 919 is more accurate. Yeah, see? So that's us not able to get up. We're bouncing against 919, and then we just broke out underneath. So now we're getting dangerous into the collapse, which is the 908 territory, which we don't want to be. So we do not want to hit this black line here, or things are going to get really bad. Now, GME is still going down, but the Dow's going up, so we might survive this. Yeah, shit. Things are getting dark. Yeah. Now, so you got a dome shape here, right? So now 1, 2, 3. So if we get, in the next 3 minutes, we start to see it come up, which we're already seeing it sort of come up right now, then we're going to get a W shape, and we might be okay. If we don't see green in the next 3 minutes, then we're probably going to go down, and you may want to ditch your positions if you have any short-term positions. Because, yeah. Now, if we hit this line, we may get a huge bounce from it, right? But I wouldn't bank on that. AMC is inside the ETF for the meme stocks. Just going to catch up on the chat. Yeah, it could be the new ruling causing the markets to resettle. Usually the markets adjust ahead of time. They're usually about 2 weeks out. The markets look usually 2 weeks in advance, and then, well, it depends what part of the market you're talking about, but let's say stocks, they usually look 2 weeks out, and for major events, like the summer earnings seasons, or spring earnings seasons, or the summer sell-off, or the fall buy-in, they can start up to a month. So if there's an IPO or something, you'll see 2 weeks out. There'll be a lot of action, but the action starts about a month out, or whatever. If there's going to be a change, if those shares are going to dilute the market, we'll see people price in about a month out, and then 2 weeks out, we'll see all the heavy moving of stuff. And then the retail investors come in at the last minute and make a mess of things the day of. So it's for something the government has announced. It's April 22nd, right? So it's 2 days out. So we would already saw the effects, all this month, which would have shown increased buying, right? Which we haven't. If anything, it would have been here, right? On the 13th, 12th, 14th. And that is basically 1 week out. And then this one here is the 5th. And that is 2 weeks out. So, and this one here is the 25th. And that is a month ago. So early short sellers coming back in, medium term, and then short term smart. These are all smart monies, let's say, and then us. But then the us short sellers aren't really us, but the retail short sellers or whatever. But of course, that's not what it is, but just to give you an indication. And it's strange that all of these basically fell pretty much on a Tuesday. Yeah, the 6th, the 13th, and the 30th. So the 6th, the 13th, and the 30th. Oh, 30th, sorry. Here. That's 25th. 25th is a Thursday. So this is Thursday. This is a Monday, Tuesday. And this is Tuesday, Wednesday. Interesting. But almost a week apart. So maybe, so today's a little bit more of a technical show and less of looking at it by the minute. Maybe, since there is a secular time frame, this will play out. Look at that. It does. Whoop, end. Whoop, end. Whoop. And this one's gone on a little further. So this one's tightening up. So if we do a second one, and we do this guy, nope, that one's not valid. If I do this one to this one, that's a little more valid. Whoop, but in the down direction. Whoop. So we're, this cycle completes by end of day today. And then on the big cycle, it ended here, which is about right. So it starts to go up, but it changes its mind. So this is an end of a cycle, but it could have been a micro macro deal. Or it stopped here and then a new cycle of tighter bounces took over. So that has us end of day today. And that has us at noon yesterday. Actually, noon yesterday is when it started to go all grim. But anyways, yeah, I don't really do the circles secular too well. But like, you can kind of see that this is like an up phase and a down phase. So here, if I draw a straight line, see, there's the down phase, which is this hump. And then this hump is the up phase, right? This one doesn't line up too well. This one is a turnaround. This one here, if we divide this and this looks pretty much the same. They're just flipped within these two humps. This is the ass end of this, and this is the middle start. So anyways, there is something about time cycles, because the larger smart money works on cycles, which is, this is the 12th to the 23rd, the 23rd to the 2nd to the 10th. So what is that, a 5-day cycle? Second Friday, this is the 1st to the 9th. This is the 25th to the 1st. These are 9-day cycles. 25th. No, they're basically a week. 25th, 1, 8. So it's Thursday to Thursday, basically, these cycles. Yeah, 1 week cycles, which makes sense. Banks and everybody gets paid on a Thursday, right? So you're going to see people doing stuff on Thursdays. Interesting. All right. Well, enough milling with that. Let's go back to our daily suicide watch. Our patient is treading vicariously close. Oh, it is not good. All right, I'm going to have to bring out the unholy witchcraft, because we are clearly not doing so well. Okay. Oh, damn it. My mouse skills need work. There we go. Maybe it's not my mouse. Maybe it's just this thing giving me trouble. Okay. There we go. When all else fails. There we go. I'll turn it around. I got detractors. What's detractors? Yep. Exactly. I'm just gonna take a quick look at FinViz. Yeah, I don't know why people are complaining. I mean, if you bought in the last year, you would get 381% returns. Man, that is fucking great. Not many stocks give you that. All right. Look at this. Good. Oh, dislikes? How many dislikes does this thing have? It doesn't really matter. Likes, dislikes don't matter. It's just for personal view, I guess. Yeah. And of course, we always get one dislike because of what's his face? Yeah. Zach. Yeah, I just went and took a look. Yeah, it's all good. It doesn't bother me any. It's just for personal, as far as I know, it's just for personal, which one of your videos is what people like, right? At least that's how they present it to you. So perhaps if you get nothing but dislikes, YouTube uses that, but it doesn't bother me any. So it's all good. Yes, 4 more than typical. Yep. We're actually pretty low for playbacks. We're at 32 viewers with 253 playbacks. On a good day, we'd have about 600 or so. Well, that's the point. That's the point. I'm gonna update it. AMC Stock, AMC day trading. We don't need stock in there. Let's see what. Let's just do a title that's opposite. Let's see what Trey's doing right now. Hedge fund liquidation, Citadel. Okay, here we go. So, no squeeze. No squeeze is coming. Hedge funds rock. Citadel owns you. There we go. There. That's going to get me the likes. There we go. Yeah, well, that's partly why this is called the lemon stand, because we squeeze lemons, right? It's a play on words. You're squeezing the lemons. The market squeezes you. Yeah. So I'm like, you know what? Plus, the lemons are magical. Like you see right now, it's holding. It might spawn some demons. They might be yellow and zesty fresh, but our portal to citrus hell, it works. Oh, the title already got 4 people to show up instantly. I love it. Yeah, if you guys can think of a better title, I'll update it. Since we're just watching this thing go sideways. Oh no, it's not your dad. My wife's boyfriend works at Citadel. Oh, I'm gonna put that up. There we go. My wife's BF works at Citadel. There we go. And that's a clickbait title because people will be like, oh, hey. That's awesome. I love it. I think we're day 7 of Suicide Watch now. There we go. Done. My health's not bad, Zeus. Today's not so bad, although I was super tired for some reason, like yawning nonstop, which I think is a side effect of the medication. Yawning is a buildup of carbon dioxide, so it's either caused by you're not breathing properly, or perhaps this medication, I don't know, I don't absorb oxygen so well, but I just yawn. So anyways, so I fixed that with some coffee. But aside from that, it's not too bad. Just Oh yeah, I got a microphone to order. I'm gonna have to order a microphone soon for belts. Unfortunately, the market went down. I reinvested my money yesterday, but sad pandas. I'm gonna have to sell more calls to afford more microphones if the share keeps going down. Yeah, stupid is as stupid does. Yeah, by their very definition. I guess while we have a moment here, I can load up Photoshop and I can fix that picture in the right-hand side there. There we go. Oh. Do 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 do. All right. If it starts lagging out, sorry in advance. Yep. Oh well, the technicals say the stock's going to be fine. Everything says the stock will be fine. It's just the short term's looking pretty bad. Like the ultra short term looks really bad. We're like 3 cents away from oblivion. And we did bounce. But that could have easily gone much worse. And we're still not out of the woods. So, yeah. Do 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 do. Oh no, the reason why we have such shitty graphics is just because I don't care. I'm pretty good at Photoshop visual effects. If I really sat down and put more than like 10 seconds worth of effort, we could have nicer stuff. But I'm purposely half-assing this because I don't want it to turn into a job. I trade stocks for my own personal gain. As soon as this turns into a job, it's like, right? So I'm trying to find the balance between being entertaining and have quality for you guys, because I enjoy your company and I want to make this better for you, and not making it a work. Because I don't make money off this. I'm not scamming people. I'm not trying to be try to get Weeble signups for garbage. So if I was a big sellout, maybe. Yeah, I always find it interesting that people just give money to YouTube personalities who don't even give a shit about their existence, right? They just care because they want their money. But, they don't know who you are. They don't care about your day. You're just one person amongst millions or thousands. They're just hoping that your need for attention will cause you to give them money. It's like, yeah, I could exploit that, but it's so bad. Like, cancerous bad. Not good. Okay. This should do it. And then let me just fix my neck. So I'm just watching the stock in the corner while I work in the Photoshop. Yeah, don't give me that trouble. I'll slap you dead. Actually, I could probably stream my Photoshop, actually. Here, so you guys can follow along. Window capture, display capture, window capture, and Photoshop. Here we go. Whoop. Whoop. There we go. Okay, back to Photoshop. Dun, 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 dun. Oh, wrong one. There we go. Okay. So Okay. So that fixes that. And then I'll just clean up this half-ass eraser job I did earlier. So just a little bit better. See, I have like a really good hand, steady hand here. But when I use that chart and I try to draw, oh my god. It's like I suck the big 1. Alright. Let's get rid of this highlighted edge. Good. Okay. Give myself a little beard trim. Get rid of the artifacting of this low quality JPEG that I screen capped. Oh, come back here. I used to use Paint Shop Pro, so I always hit the wrong key when it comes to changing the brush size. It used to be Control and scroll with the mouse wheel, or page up, page down. It's now the brackets, parentheses. Sorry, square brackets, also known as brace. Parentheses are the curved brackets. Ah, no, summoning. Okay, how to fix this? Assault ring. Okay, there we go. Just pour some salt down. Although I think we have to leave a spot for it to get out. We'll cross that road when it comes. So normally if I had more time I would just go and do this properly, but this is gonna be good enough. I could even zoom in and do something like that, so it's like an anchor man, but I like the diamond hands, so I could do that as like a, you know, the lemon stand 824. Yeah, so something like that isn't bad, but then the full frame is decent. That's when you know you have something that's good. It works on the macro, the micro, and the full size. Yeah. Anyways, all right, let's just save that. And Okay, good enough. So now let's update that image. There we go. Good enough. All right. Oh, if you want, sorry. If you want to, yeah, if you want to make thumbnails, go for it. I don't care. Sorry, I'm not always looking at the chat. Yep, I made that thumbnail this morning. It was fun. European Super League. Hold on. There you go. I updated the banner. Oh no, yeah. Well, it'll be fun. We can try it out. Uh, but yes, yeah. No, thanks for the offer. Let's do it. Yeah, I see the world as problems. So I have like a bit of a military background. So if there's no problem, everything's good. And so you're always looking for problems. Um, so when someone says I don't care, it's basically yeah, like thumbs up or it's great, thanks, in more modern parlance. As soon as a person cares, that means something's wrong. Can I just drive this truck over somebody? I kind of care about what you're doing right now. Oh God, what am I doing wrong? Yeah, yeah, yeah. I can, I can set this up nicer, and this is made for a TV, but I could have content in these boxes that are images. So there's a layout here. These are 1080p images, so I can have 2 video feeds in each of these corners. I could shrink the main body of this, and I could move these watch lists around. Right now, this frame and this frame are 2 different websites. It is technically one website, but there's actually 2 websites being loaded. 2 versions of this, basically, and I'm cropping it so that this is bigger than it actually is. So it's easier for you guys to see. And then the time that's up here, you can see my cursor disappears. That's another website that I've just shrunk down. But I'm thinking there might be something I can do with this box here, because like this is useless. We don't need to see this. But the second I click on something else, this is good for you guys because, whatever, right? I'm thinking maybe like shrink this down so it's always up, but in a corner somewhere, so we have interesting like maybe graphs. But I don't want to shrink the main content area too much because that's the important stuff, right? But like when I was watching Matt Khors, no, I was watching Trey. His main content is like here, right? He occupies like 40% of the screen here. You can't even see the numbers. Like, so he's just moving around and all this, and it's like, well, that's great. How the hell are you supposed to tell which way's up if you can't see anything, right? So that's my concern. Oh shit, salt ring. Okay, hold on. Okay. Yeah. Okay, there. We'll keep the demons out, but we'll let the... There you go. And now you have to stay out. There we go. The summoning circle tends to... is the best thing we have. Look at that. See? It works. Some people call us a cult, but see the magic lemons? They fucking work. Oh yeah, eventually, yes. I would say so, if that's how I say your name. Definitely. I'm not a financial advisor, and giving fitness, so saying something will do something, is technically not legal and not a good idea. But in my opinion, definitely $30 is or $26, $28 to be more accurate, is something in the cards in the near future. Once we go over 30, I don't know how AMC is going to react because there's no precedence. They might try dividing their shares. I don't know. But definitely this company is richer, stronger, faster, better, bigger than it's ever been. The only thing that's wrong with this company is they have a debt overhead and they're coming out of almost bankruptcy because there was problems with how theaters are run, but there's not a problem with the theaters. It's a problem with the industry. So hopefully that's settled. It's not, but at least it's band-aid enough. So now we got tons of people going to theaters minus the pandemic. We got money rolling in. So all we need is now the movie companies to let us keep most of that money, and the stock will fly through the roof. And that's really the big threat, is that movie companies will tell theaters to go shove it, or movie companies will make their own streaming service, right? But as Aron pointed out, even if you have a streaming service and you release your new titles on there, people still want to go and get the experience of a theater because of the sound and the picture. And filmmakers make it for that screen because that's what they're targeting, right? So theaters have a place in the picture that cannot be removed by streaming. So with all that said, the threat of streaming is minimal, right? It's the same thing with VCRs and DVDs and Blu-rays. They thought that would kill the industry. What really hurt the industry is piracy. But that's hurt the whole industry, right? Because I don't care about the quality. I just want to watch it for the story, right? So, yeah, with all that said, I think, everything's looking good. It's just a matter of them fixing up the house with all the new money we gave them, and then a matter of time. So when will we get to 30 is a different question, but I'm hoping December. Right now, I don't know. We should be recovering much quicker than we are, and we're just going sideways. So maybe January, like start of January, if not the end of December, is where I'm aiming for 30. I think we'll hit 30 before December, but that will just be a spike. When we finally level out at 30, it's looking more January than December now, but that's the goal. That's my 6 months from now goal, 7 months from now. Yep. So if you look at the volume, AMC is not doing poorly. It's actually gaining speed right now. If you're looking at the number doesn't really matter. The negative 5% doesn't matter too much. What you really want to care about is how much volume when it's red and how much volume is it when it's green. That's a little bit more important for the long-term health. Same as a human being. If a human being's running and falls, you don't really care about the fall. You care about how quickly he gets up. If he doesn't get up and he doesn't move, he's dead or something's wrong, right? But if he gets up and recovers, how quickly did his body recover? It's the measurements there that we look at, and then that's showing us the health of the human being. So if we don't have the way to measure it empirically, we just poison him, and if he recovers in 2 days, when most people recover in 6 days, we know he's healthier than most people until we kill him with the poison. But you get the idea, right? There's no way for us to tell how the market's doing or how the stocks are doing. All we can do is see the results of a poisoning or results of the market shitting the bed. And then when we don't react exactly, we can react better or worse. Then we can gauge how we're doing, right? And so that's what we do every day. We look, we test, we measure. So we're in a period of low volume, right? Look at how this volume's just garbage, but it's picking up. If we go into like a larger look at the volume, so we have all this demand back in February, right? All this hype, and then compared to now, it's like a fraction, right? So the period we are in right now is more of a thinking, waiting, consolidation. This really fucked us, right? Like we were doing pretty good. We're starting to speed up, but that Wanda sellout just set us off. So now we're going to slowly gain up our strength, change our mind, and we're going to take off. So you're going to keep seeing low days until there's commitment on the upswing. And as soon as the stock does like a this, then the volume is going to go with it because people see they're going to pile in, basically. So we're just waiting for that. But that's basically why the market looks slow, looks negative. In a nutshell, is just because we're in a period of down. Mornings are always the strongest. Give me a second here. W, and the shoulder was here. And the other shoulder is here. Okay, so we're on a W and we're starting to roll, but the shoulder is right here. So we rolled to the shoulder and we bounced up. So this might actually become an S shape, a really small one, and then we go up. So if this has any height, 1919. So if we see 1919 or 1920, sorry, 919 or 920, not World War One, we'll take off. And of course, it's resisting it. But anyways, I hope that answers your question. I kind of got distracted halfway through there because I saw a pattern. And should be okay. Yeah. So normally, retail investors are quick in and quick out, right? Exuberance and fear, and they exemplify it. Like if you look at that watch list, it's blood red. Like it's about as bad as it gets. You're almost at 1% down on the Dow, 1% down on the S&P. NASDAQ is closer to 1%, right? So it's just a whole, and the NASDAQ composite. So the actual NASDAQ is down 1.53%. So everyone's hurting. So this is a macro problem, a market-wide problem. But what we can take away from that is if everyone's getting hit with nerve gas, how did we react? So we're a high-risk gambling stock in most people's minds. So if everyone's dying, we are going to be the first to go because we're the ones that's the highest risk. This is the one that is less chances and all this other stuff. So we should take the most damage in a stock market or a whole market route, right? We're only taking 5% damage right now. That's not too bad. Like it's still bad, but for a stock that can move 30% a day, that's not bad. Whereas the market is the overall market, the Dow, 5% on the Dow is a recession, start of a recession. They shut off the stock market if it hits 5%. If it gets over 2.5%, 3%, people start panicking. 5%, things go horrible. 15%, the US is actually in a recession. 30%, the US is in the Great Depression. Right? So it is a massively different scale that they're playing on. So they're doing way worse than us. We're only at 5, which is about, a tenth of our theoretical maximum. Whereas they're currently rolling around 1/30th of nuclear Armageddon or 1/3 of their bad. So we're doing about, let's say, twice as good as the market right now, even though our numbers don't add up, if you can follow that logic, right? Now, if I just look at the market as a whole, let's see the absolute worsts. So Ford took a 4.5, GE, so they're pulling out of defensive stocks. So that's never a good sign. Are we in here? No, we're not in the high volume. Okay, good. So planter, bingo, SM, yeah. So all these gambling stocks, INO. See how it did do its S. Good. Now breakout. And you should have a breakout right now. It should boost up. Okay, so the biggest gainers today are 24 and then 5. So it's blood red across the... If 5 makes it to this list, of all the stocks in the US, 5 is on the list. That's not a good day for gains. Now for blood red, the worst is 29, 30, 28. So, and that's not too bad either. So this list I think is only 10 or 15, maybe 20. So you're down into the tens as well. So it's just a general red across the board kind of day. So a little bit of a market pullback, which, you know, is what we're seeing here, right? It hit hard, but it's pretty much flat. It's not too bad. It's going to do one of these. Yeah. Because the Dow has bad days, like has great days. You know, let's go find a bad day. Well, kind of like that. How much is that? That's 0.61, so we're doing worse than that. But then it jumped up 1.14%, right? And it's riding high. How about this one? So from peak to valley, 0.5%. And to now is 1.5%. Yeah, it's not critical. It's not a great number being down 1%, but it's not too bad. But my watch list, of course, looks pretty grim. Oh, actually, how did Germany do today? Okay, well, I guess maybe Europe's leading the charge. Wow. Okay, U.S. currency, Japan. Japan did pretty good. Oh, Roblox. Remember when I said this was going to tank like a dead fucking horse, and then it did this? It just delayed the inevitable. And now I'm probably filthy rich on my paper trading. Yep, up $12,000. Giggity. Suck it, dongs. Yep. Yeah. Yeah. Where's the UK? So that's the UK, and that's Germany. Fuck yeah, Europe just got punched in the nuts. Holy fuck. Wow, the UK economy. How much is that? You know it's bad when you have to scroll. Oh, 2.5 over one day. Yikes. And it's still not. I have to zoom out. Oh, lordy. Yeah, but they surged up. Okay, so they went up 5%. Oh, yeah, so they're just paying for this psychotic recovery. So the US stock market is very strong, no matter which way you slice it. But when Europe gets involved, they don't have that. I don't know what makes the difference, but they don't have that stability. So if Europeans or say people from the UK are getting involved in the stock market like Americans are, getting on Webull and investing in local stocks and playing it like a casino, their countries never tolerate it well. Every time it happens, they end up going up a lot, getting crashed. I don't know why. I don't have the knowledge to know why, but they never handle it well. So, and I don't know, maybe different policies, but yeah, so they basically got in on the same surge, right? So the 2020, but this is all the retail investors here, this surge. So they have a potential, like they lost 46% of their stock market. Holy fuck. Oh, wait, wrong way. No, that's 32% of their stock market. So 30% of the, is this the GDP? No, top 100 of their companies went out the door. So they're recovering from that. They're still down 7% or so. Yeah. And now they're on a tear from 26%. Yeah. So this might just be another bump in the road, basically like one of these. But that's still a lot, you know. But yeah, compare that, say, to the Dow. This should not be as bad. It could be. Yep. So they lost 37 as well. Shit. That's bigger than I thought it would be. But they recovered. Stacks. Yeah. The UK still hasn't recovered, right? The Germans recovered in... How much did the Germans go down? About the same. And the Germans recovered in... one year. Well, less than a year. So 2 months less of a year. So 10 months. Not bad. So America has a 10-month head start. 10-month head start? No, well, -1. So that's a 9-month head start. Yeah, 9-month head start. So yeah, interesting. So it would actually probably be a good idea to invest in Germany if they're behind us by 9 months. But Germany's showing the exact same trend as the Dow. Yeah, just over a different time frame, I guess, if I got this right. Oh, where's DAX? Why are they looking the same? All right. Well, anyways, enough of that. But yeah, the U.S. is quite the market. I don't have much experience with other foreign markets, like investing with them. But I do find the U.S. market is, even though it's stable or unstable, it's strong. Like it just holds. Whereas here's the UK, heavy, Germany. Like that's almost a complete eraser. Like almost all the way back to nil. Whereas the US, you know, it suffers a massive implosion in the dot-com bubble, and it's still riding high. You know, it has a financial. This is the gas. 87 is the gas crisis, and or is that no 76? 76 is a huge one as well. 1976, right here. So that would have been a. I can't even. So right here, that was a big time for the Dow. Man, to think someone was looking at these charts, some old timer that's, you know, your age at the time was looking at this and he's like, oh, here we go. Today's the day, with that old timey voice. And then he's like, holy shit, I'm rich. And then we never, ever, ever go back. There's the exuberance going into the dot-com bubble. And look at that. Look at that line. It's vertical, you know? And then, year 2000. But that's dangerous. Like, that line is this line is literally straight up. It's as straight as it can get, you know. But we then come out of it in 2008 just on a tear, which is where we are now. So I mean, we're overdue for payment, but we kind of had that with the what the hell is this? The pandemic. The pandemic technically triggered off an overdue payment. And I bet a lot of people jumped out of the stock market thinking this would trigger the recession. I started investing around here. 2018, 2016 is here. So yeah, I was in this time frame. So as this was going up, the whole time I'm like, we're on a tear, and I'm waiting for the big turnaround, right? And technically it was this one, because that wiped us out to 2016. You see how far that went down? So I think that's the payment for this block, and then this block goes to here. So really it's only this piece that's unpaid for, and that's perfectly fine. That's not that much, because this, if you follow my line, so if you follow that line, all of that down to there is paid for, and here all of this up is paid for. So yeah, but anyways, we'll see. Looks like we're just going through some short-term hiccups, but the macro affects the micro. So if this doesn't come out of its funk, we might break down. We need to get some height before this decides to turn. And we're forming up a crown. All right, let's get a lemon in here. Let's just jam it right in there, and we'll hook up a power source. We'll put another lemon in there, and we'll hook that lemon into what the hell is it? A flux capacitor. There we go. That should provide the power necessary for this lemon to keep it up. Just upload it to like image URL. It doesn't matter. Yeah, we're never going up to 500,000 or whatever people make up. It's possible in a squeeze that you could go up something of the equivalency of 1,000, but AMC wouldn't let the stock get that high. They would just keep dividing the stock every time it gets over, let's say, $100. So it's possible we go from 100 to 100 to 100 to 100 to 100, and they keep dividing it, and we end up being around 1,000. That's possible, but you'll never see the share price actually go to 1,000. I don't think that's going to happen. Yeah. Yeah, these aren't potatoes. These are definitely lemons. And this is our portal to citrus hell, where everything is sweet, not sour. But yeah, we're looking like we might go into a crown, which hopefully the magical lemons can prevent. I will just put a big pile of lemons. All right. Keep that going. I just want to keep us away. I don't care if we go sideways for the rest of the day. I just don't want to be down in if we go below 9. But I don't even want to test that area. Keep us away as far as we can from 9. Because yeah, if we stay in here, eventually we'll go up, and that's not a problem. All right. Let's see how many downvotes I got so far. I got 11 downvotes. Nice. I managed to go from 6 to 11. Hell yeah. All right. The thumbnail's not bad. I like it. It fits pretty nicely. Some people are going on about Dodge. Yeah, just doing a quick check on the landscape. There's so much. It's all reaction videos. Nothing but reaction videos. Yeah, cool. All right. Well, everything looks good. So we just got to wait this out. Lemons look like they're doing their job. That should stave off crown shape. So if this just goes anywhere, sideways, up, whatever, as long as it stays out of this territory, then we will break the crown shape, and then this will turn into a W potentially. So a crown shape, for those that are new, is this shape. The psychology is that the people that get in here, when it comes to the same point over here, they sell. So right now, you see how this is lifted. You can have it go a little higher here. They don't have to match, but you do need this shoulder to be lower than this top, or it doesn't work. If it does this, that's a different thing. So we basically are right here, right now. So we want it to go like this, or better, this, so that we can avoid this piece. Because we don't want to trigger the people that bought in here to sell. Because then they'll drag us right back down to the bottom, which is the psychology of a crown shape. So the best case scenario is that we go up, we break a new high, and then new people pile in, and then we take off. And then that's kind of what an S shape is all about, which is here. So the people that would sell get out here. So the buyers take over, but the buyers take it up. So these people haven't bailed out yet because they're still waiting. But as soon as you break a new high, they all get in, and then you go for a second run. Also a very phallic shape. Oh yeah. Anyways, that's the psychology behind it. So we can't make the market do what we want it to do. We just have to watch. So that's what we're hoping for. And then there's a channel right here, kind of backs it up. This little guy down here, the negativity, kind of breaks the channel, but we quickly came back. So as long as we keep doing this, we should be okay until we hit right here. Then we're going to test if we're going to go down or go up. And that's kind of going to be our next hour. Okay. Yeah. The only thing that makes us go down is drawing a turtle. Every time I draw a turtle, it tends to bleed from the eyes. It's like, look, I made a turtle. Because a turtle's usually when we have a dome shape. So when we have a dome shape like this, right, that's the stock. I'll draw a turtle like this, and I'll put his head here. So the stock bounces up and then bleeds out of his eyes. And it's like, oh no, don't draw turtles. In fact, what am I doing? I better not draw a turtle and lure the stock down there. Well, actually, what if I draw a turtle up here? Eh, you want to bleed out the eyes? There we go. Come on up and get this nice juicy turtle. You know you want to. Look, he's got a little turtle tail. There we go. Yeah. Yeah. Normally, I draw animals based on the cloud shapes of the stock. Like this one has got some saggy boobs, but I could draw the udder of a cow, right? And then there's another leg, and there's a tail, and so there's your really badly drawn cow. There you go. Okay, so where are we? We got a turtle. Oh yes, I'm looking for your upload. So it doesn't let you post links, but let me check. Let me mute myself. Here, try posting your link. Just leave out the HTTP, and then I'll go pick it up wherever you put it. I watch it. It would be hilarious if the stock just goes like, like right up to the turtle. If so, I think we're changing the stream. House of the Bleeding Turtle Eyes. Hey, it's not crazy if it works. uh, all right. Well, while this is running its course, I'm going to quickly. Well, it's not going to be quickly, but I got to go use the washroom. Coffee kicked in, so I will be back, and I'll get the URL when you post it. If you think of some good titles, and we'll keep updating the thing. Yeah, exactly. All right, updated the title. I'll be back in a minute. Well, more than a minute. And I'm back. Oh, destroyed that washroom. Okay. Let's get some more energy in here. Okay. Well, get a lemon battery going here. It's just gonna need more juice. Okay. Lemon brand batteries. Okay, get this hooked up. Okay. And that should be what it needs. Maybe add a little bit of water for conductivity. All right. Yeah, the lemon 5000 that I put up for etc. Oh well. No, it's gone now. It's gone to a better place. Did I miss a link? A COVID long hauler. Sweet. Well, since the crown kind of got delayed, you might be okay. Because if it was to complete fully, it'd be down here, right? So you're now going into a U shape. So most likely this was supposed to be a W, and then it failed at the corner of the W. Or that this was supposed to be a U shape and it went up, came down, and failed in its corner. But I don't think it's a crown shape. I think we're going to stay off this down. But where's the link? I don't see anything. If you post a URL, it doesn't show up. It might show up for you, but it doesn't show up in the chat. I think they ghost you. You can post it there if you have Reddit. Where's the rocket? Here we go. All right. Let's get this baby refueled. Or actually, here. Get it loaded up. There we go. New post in the Thousandaire Club. We all get notifications. And you apparently failed at posting an image. You drag it in. Yeah, or copy paste will work as well. Yeah, I don't know why it's that way. Maybe because it's a new group. I remember you can just click pictures and then upload it, right? But it's all weird. The group is so special. Yeah, special needs, but I'm bumped. Oh, okay. We got our first passengers. Yeah, I was wondering if this thing might have been hiding the passengers. Okay, into the rocket. Let's go. Let's get this thing loaded. You can tell AMC is doing well when there's a lot of drawings. Do you like our new layout belts? I got some spicy thumbnails. It's great. No, I've been trying out crazy titles. Yeah, exactly. Yeah. Well, we've been trying out titles to see which ones are the catchiest. So far, in the last half an hour, we've doubled the amount of people that have clicked on this video. So definitely the titles are working. If only just so people check us out and say, "Oh, that guy fucking sucks," and leaves. Oh no! Someone fell through the rocket. Come on, come on, load up. Hop on in. Okay, is it loaded? Time to turn this frown upside down. Let's go. A ghost rocket. All right. Image URL. Okay, found you. It got downvoted already. You got -2 points. So you posted what is that? Is that Mr. Macy? No, that's wow, people on image URL love that lemon guy. Wow, you got 20 views already. 100 views on the other one. You for an account you just created, you got downvoted into oblivion, but you got a lot of views. I'll give you an upvote. How do I do that? Oh, I have to sign in. I'll get the link and I'll post it here so people can see it. Poor guy, he took one for the team. People are like, how dare you take my beloved icon? Hey, the rocket's working. Image URL. Oh, get image URL Emerald, where it's no ads and oh my god, it's like all the stuff in the 1990s, 2000. Well, how are you going to make money? We'll sell a subscription. People will subscribe. It's 2020 and people are barely subscribing to YouTube Premium, right? But Google's got people by the balls now. They basically they've made it so your Google Home won't work unless you have YouTube Premium, and your TV will hit you with 100 ads a second unless you have YouTube Premium. So they definitely made it the ecosystem to punish if you're not paying for it. But sites like Image URL or whatever, they're still stuck in the early 200s. They can't do it. But anyways, ZU. I mean, I'm sure some people sign up, but I think the adoption rate is like 10% when they last did the study. Here is the link. There you go. Yeah, and adding content is also like part of the game. Okay, let's save image as. There we go. And let's see how many dislikes we can get with this new thumbnail. Which one do I want? This one. This one, and here. Alright, let's give this a try. Oh, file's bigger than 2 megabytes. The hell's the quality on this thing? Give me a second. I gotta load up the Photoshop and downgrade this photo. All right, let's go. Planetary liftoff. Let's keep going. So in this case, we did like a really crummy U shape. So we should, now that we're at the halfway mark, this will be our test. If we break through this, then we're going back up. We'll see. This is a 300 megabyte friggin' file. Holy crap. What did you upload this as? A JPEG? How the fuck is a JPEG 300 megabytes? File info. Unless I'm reading this wrong. Wow. Yeah, that's how. The image you uploaded is, well, unless I downloaded at a bigger size, it's 15,000 pixels by 800,000, or sorry, 15,000 pixels by 8,000 pixels. Yeah, that would do it. Holy crap. But maybe image URL scaled it up. But that is just a tad big there. Let's do width. Okay, still over 2 megabytes, but I'll just I'll resell it. File, save as. There we go. Okay, now I can upload it. Holy crap. 300 megabyte file. No, image URL, I stole it from there. And it looks, if you didn't upload it that big, that's how big it came down as. Massive. Yeah, because when I tried to use it immediately, it's like, this file's too big. And I'm like, what? Load it into Photoshop, and it's like, this file is massive. 300 megabyte file. But image URL might have upscaled it. Yeah, okay, so I'm looking at it here. So it is exactly 4.7 megabytes. The 300 megabytes is Photoshop, the size that it made, the file made, with all the overhead and all that sort of stuff. But the actual saved file was 4.7 megabytes. It was 96 DPI, and it was 15,000 by 8,000 pixels, basically. So I think image URL upscaled it, if that's not. But anyways, there you go. I've changed the thumbnail. It's now the lemon with the eyes. I took the most hated one. Oh, at least you got positive voting now. You were negative, and now you're upvoted properly. Hooray! Wow, your account's got lots of views. Okay. There we go. Oh yeah, I'm quick. I don't mind trying stuff out. We gotta waste some time here until this baby takes off, so we'll just keep on trucking. There we go. Just load up that rocket ship. Get some more passengers. Good times. Yeah, where's Lambo? There's another good one. So instead of where's Waldo, where's Lambo? I love the Reddit memes. Diamond hands. Actually, I should be able to find a book of Where's Waldo. Yeah. So that one there, you can do Where's Lambo? And then you just throw a car over and put stripes on it. Yeah. And I used to love Where's Waldo as a kid. That is so good. Such a good book. You could do a Where's Adolf or Aldo. Just A-D-O-L. Okay, you could do Aldo by just changing the letters. Mm-hmm. Where's Waldo Coronavirus Edition? Nice. Yeah. Where's Lambda? And it turns out it's not a Lambo, but actually a Lambda. That's why no one can find it. What if someone has done a Where's Lambo? Where's my Lambo Bitcoin? Yeah. Bitcoin millionaires are buying Lamborghinis. Well, why not? And of course, you have to show off the fact that you bought a Lamborghini so you can make more money. But Lambos aren't that great anyways. I take a Lotus Elise. Or a Cybertruck. I want something that would either it's good performance or it can take a bullet. I don't want something that costs me $4,000 just to lift the engine out every time I got to change the oil. Oh, here we go. So this whole old is an old meme. Here, that's what we need right there. The guy was right though. Bitcoin has rocketed since 2018. As to answer why there's no squeeze, you can't have a squeeze if the stock market has gone down 5%. You have to have consecutive days of positivity. Or one sudden upswing. So it's it's too late. You have to could have had a squeeze maybe a month ago, I think it is now. We're right now just waiting for takeoff. We got a rocket that's just fizzling out here. Draw a moon. Draw some perspective. There you go. That can be our humble nativity scene till close. So no one can predict the stock market. I realize by having the title I do, I'm going to get new people here. But the for end of day, probably we're going neutral. For the long term, AMC is probably heading back to 30 by December. So that's my current prediction, if you will, is based on the chart and the timings and all that sort of stuff. 30 by December, I'd say. My anus. I was playing some what is it? Stellaris, and you can name planets. I should name one my anus. Oh no, it's the aliens from my anus. The lemons are because they're an icon, and it was the first icon that we used that actually had results. So now lemons. We tried anchors, fat people, rockets, moons, lemon moons, but the lemon moon is the where. Actually, maybe we should get the where, because now we have space. We need the where moon, or the where lemon. That's what it is. There we go. And lemon. There we go. The where lemon. Part moon, part lemon. No, Dr. Overkill was asking, what about the lemons? Yeah. Oh, unless you're talking to somebody else. Oh, and to answer your question, Rock Climber, the other one, you got to look at the interest rates. So if you're paying out interest and it's let's say 20% a year, right? That's not a lot of money. Like most consumers pay 20% interest on their credit card a month, right? And then they have thousands of dollars of credit card debt, which is incredibly stupid. So if you have a whole year, that's 12 times less than a credit card payment. So if a credit card hits you for, let's say, $100, right, interest, Now divide that by 12, or you pay $100 at the end of the year, whichever way you want to look at it, right? So it's absolutely nothing, 20% over a whole year. If it's 100% interest, 30% interest, 80% interest, something more than 20, then it starts to get painful because in a third of a year, you're owing half a stock or a whole stock or 30% of a stock if we keep with the previous numbers. So that hurts because it may take a couple of months for your stocks, your shorts, to come around, and you may not want to take the risk of losing all your money and then 30% of your money, right? So borrowing fees don't matter until they're very high, and then even then it doesn't really matter unless they hold for a long period of time. But if they're just shorting for a week or a month, even at 100% interest, a month, you divide that by 12, and then again, if the share is $10, you're paying $1.20 to hold a single share for a month. Now that's pretty heavy duty, but it's still not killer, right? But it means the short seller has to make 10% a month to offset the interest. And then at that point, it's not profitable, right? So that's when it starts to matter, right? Wow, somebody just spammed Reddit. Apes, rockets, and are those lightning bolts? Can't tell. But anyways, yeah, this channel's more for wrinkled brained apes. We're just trying out new titles. No smooth brained apes here. Let's try stock trading. See how that goes. Okay. Oh, and actually, let's edit that. There we go. Fixed. It's pretty good that it updates the title without you having to refresh. That's good. Well, Pornhub has a reputation of staying firm under pressure. Na. Yeah. Well, they don't understand how it works. I don't know why Chipotle hasn't subdivided their stock. Actually, let's take a look at Chipotle. Let's look at the fintel on Chipotle. What's the stock ticker? Actually, I can do that real fast. Chipotle stock. Okay, the stock ticker is CMG. Oh, I think we saw CMG in here. It. No. Okay. So if we look at Chipotle, which was $300 in 2018, it's gone up 300%. So it's gone up as much as we have we've gone up 300% in less than a year. Chipotle went up 300% since 2018. So we're beating them by a factor of 4. 1, 2, 3, 4. Yeah, by about a factor of 4. So we're still better than they are. Now I want to look at their shares, their total shares. I need fintel on CMG. Fintel CMG. Okay. Okay. So, Chipotle has $48 billion held by institutionals. So Vanguard owns 2.9 million shares. Price Rowe and Associates 2.4 million. Fortrum Financial Group completely closed their position. Woo. Who the hell owns 2 shares of Chipotle? Jeez. Some North Star Investment Corp bought 2 shares of Chipotle at 1,500. Okay. Quite a few people have closed their position. Okay, where's the actual fintel? I want the overview. This is not the one I want. Okay. So, sorry, I'm just looking off the screen here. I'm just looking up their financials. They have 28 million shares outstanding. The company brings in $5.9 billion a year. And they pay out dividends, which makes sense. Their cash flow, wait, that trillion? Oh, I'm confused here. No, that's 5.9 billion. Okay, their operating income is 290 million. Their net income is 355 million. So they make about 100 million more than AMC does, but they bring in 5.9 billion. We bring in 1.2 billion. So we keep more money than they do. They're bringing in, what, let's say 4 times the amount of money we get, about. So they're 6 and we're 1.5. So quick math, let's say that's 4 times, but they're only getting 30%, or sorry, 100% would be 1. So they're getting, we are 1, 2, 3, 30. We're 30% less, and they're 100% more than us. No, 50% more than us. Yeah, because half of us, if we're 2, half of us would be 100. So they're 50% more, and we're 30% less than them. But their income is 400% more than us. So they're actually not that great, pound for pound. So that's good. So I'm just looking at Chipotle if you just got in here. They don't actually have that much volume, but that makes sense with the price. Let's see the shares here. So they've got about $32 million worth of shares outstanding. 32 million? Yeah. So Chipotle is pretty well bought up. That's pretty good. Where we have about 100. We have 10 times that. We have 409, and they have 27. Yeah. So we got a lot more, but that makes sense. Let's look at their income statements. So Chipotle is, since 2016, been ramping up considerably. Labor costs have gone up. Chipotle basically doubled themselves. They started it in 2009 at 114, and then they doubled themselves by 2013. And 2013 to 2014, they went from 200 to 230, then to 262 in 2015. And now they've been slowly growing about 20 million a year, except for last year where they did about 30. But that's their net. So that's not bad. But all their costs are going up, everything's going up. So where are they saving the money? Administration, holy crap, administration started off at 99,000. And now it's over 500,000. They've gotten bloated. But I'm guessing they're also expanded. Their costs and expenses started at 1,300,000. It's now, costs and expenses started at 1,300,000,000. Now it's 5,600,000,000 and 94. Rough. So we don't have Chipotle in Canada, I don't think. Or if we do, it's in a very few places. But apparently it's the biggest thing since Swiss cheese in the States. But looking at them, I'd be interested to compare it against their stores. Because it's not that great. You know, they're expanding, they're growing, but and they're getting low on shares. But I'm not seeing anything that says too crazy. They do have a lot of institutional investors. Institutional investors make up how much percent? Let me just take a look at that. So the company is worth $43 billion. On books, it's worth $2 billion. It's worth $71 book value divided by shares. So its base cost is 71. Price divided by book. Price divided by book is 21. What's price? Price is current market price. So book divided by shares is 71. So that's the base value of the company divided by the amount of shares. It gives you 71 bucks. Price versus book would be the price that it currently is divided by the value of the company. So that's giving you what? How much money? Oh, how much money inflated it is over the value of the company. So it's 21 times the value of book. Right. Yeah. I'm really bad at math, but I think that's what that's saying. So it's trading at a 21 times multiple, which is normal. Right. That makes sense. Let's see what AMC is supposed to be at. What do they have us at for our financials? So, so on books, AMC is worth negative $208 billion. Our enterprise value is 9.3 billion, and our market cap is 4.1 billion. So it's because we have debt, assets, and all that sort of stuff. We have 450 million shares outstanding. And if we go look at CMG, and CMG has 28 million shares outstanding. Yeah. So they're definitely, Chipotle could go into a squeeze, but then who the hell would be short selling Chipotle right now? Be really dumb. It'd be quite the power play though. So our price per book, we're currently worth negative 1.46. Because our company is worth negative 6.41 when you divide the book value against the amount of shares. And that's because this company has used, in the past, has used its shares to generate money, right? So it's diluted. There's 450 million shares that could still be purchased, or well, that could circulate. They're not, because the common shares outstanding doesn't mean that's how many shares are just out there. It means how many shares are not locked in. So that number could be gobbled up. We don't know how much of that is gobbled up, to my knowledge. It just means shares that aren't locked in. So we make a lot of money. Wow. $1.2 trillion in revenue? If I'm reading this right? No, 18. So our last financial statement, we had 119 million USD. and that is a 532% increase in revenues since the last report for August 06, 2020. Yeah, that would be right after the pandemic hit, eh? And that would hurt. That's 2 months into the pandemic, I guess. Yeah. Okay, let's see what else we got here. I'll look at the chat in a second. I'm just curious about Chipotle. Yeah, really what kills us is that we're in the negatives, but that's going to get better and better. Our book value will increase because the company is going to shave off debt and or already has. So right now they got a ton of cash. They could use that cash to pay off pretty much all their debt, which they've pretty much done, but they have certain debt that they still have obligations for. They could use all the cash to wipe that out, but they've already paid for the luxury of having that debt, so they might as well use the debt. They're not increasing the debt; they're just using that like line of credit basically until the timer runs out. Instead of wiping it out, but you can't get rid of your line of credit, it just sits there and charges you, a monthly fee for using it. So you might as well use it, as long as you don't, of course, go into debt some more. So yeah, they're nothing but negatives. And yeah, that's 1.2 trillion in revenue. Where are they getting this 1.2 trillion from? It's a weird ass number. So, and Chipotle has 5.9 trillion in revenues. It's an MRA. That's MRQ is quarter, MRA is yearly, but what's MR? Millions. That's an annual income. So Chipotle makes about 5 times the money we do, but they only take home 100% more than us, not 500% more than us. So overall, we are the better company for making money, but our problem is we can't be everywhere, whereas Chipotle is everywhere. And I guess if people hate Chipotle, they're at risk of going under. If people hate movie theaters, I guess there's more risks to movie theaters than there is to food. But people's tastes change, right? But then you can just downscale your Chipotles. But like a movie theater, if you downscale, then you can't sell your product. So if you get rid of your store, because whatever, it's a double-edged sword, because you're not getting income from the people that would be serviced by that store. Yeah. But a Chipotle probably can spring up and get closed in a heartbeat, right? Especially if they're not using any really custom equipment or nothing too fancy. But yeah, I think we just need to get out of the negatives. Once AMC gets out of the negatives, then all of a sudden everything's positive. Now, for that to happen, our book value, so we'd have to get $2.8 million from somewhere. If they go and put those 500,000 shares on the market and they get bought up, that would give us let's say it's at $9, or let's say $10. So if it's at $10, divide that in half, that would give us $5 million. That's not bad, if I'm doing my math right. Yeah, because if it was $1, you would have 500 million, $2. Sorry, 500 million. $1, you'd have 500,000. $2, you'd have 1 million. So at $10, you have 10 500,000s, which is the equivalency of 5 million or 5 millions. Yeah, so I think I did that right. So maybe that's their plan, to release that the shares to bring their book value up by injecting 5 million. They're basically saying they need it to, continue operations and all that kind of crap and do upgrades and all that sort of stuff. But it could be secretly more so their financials look good, so they get evaluated better, and then that would help the robots and all the people that do investing. They start showing up on their radar, and they don't look bad, or because right now, like, negatives make all the financials break. Technically, companies should not be negative, right? So that's why it's key. And then the short volume ratio is pretty low. 20. So the short, about 8 million of our volume out of our 32 million. So our ratio is, for every one share that gets one share that gets shorted, 20 to 31 shares are regular shares. So that's not too bad. It's 1 to 30. What's Chipotle like? Just by comparison. Okay. So the really bad companies have more shorting than actual shares. Number 1 is 2620. So we are number 2. This is an experimental feature. If we're 2311, we were really bad. Oh, that's today. Whoops, I read this chart backwards. Oh no, today. Fuck off. Just gave me a ad blocker problem. So we're 31% right now. So for every one oh my god, it's giving me trouble. Okay, whatever. There was 10 million and we have 31. So yeah, it's 1 to 30. Yeah, that's right. Let's see. So Chipotle isn't too bad, but where's Chipotle's? Short ratio. Short ratio. Okay, Chipotle's short ratio is 15. Okay, so 15, 13, 20. So they have 51 to 340,000 shares traded. So we're about double what Chipotle is for shorting. Okay. I don't know these numbers off by heart, so I don't know what very, very high short volume would be. Apparently ours is decent. Because if this ratio goes high, that would be good. But if it's low, then that means if you trade 100 shares and half of them, that would be a 50% ratio. Oh, so then high is bad. Or is it 0.5? I'm really bad at math. Anyways, all right, I'll stop meandering because it's going to make for a really boring channel. I'm just playing around with fintel here as we go sideways. Sad pandas. But anyways, to answer the original question, that the reason I went looking is could we go up to this price? And the answer is no. Because they got to that price because of the amount of money they make, their market cap as a result, and the fact that they have less shares. They only got 26,000 shares floating around. So the price is just going to go up and up and up and up because there's no shares to give, right? So it's eventually going to be all bought up, whereas we would have to buy up what is it, 409 million. But if we do some quick math using a calculator, so they have, let's say it was 23 times 1,500. So they're $43 million outstanding. And then if we have 409 times 9.12, we have 307. So we're almost equal, actually. Our problem is we're in the negatives. So yeah, we could hit Chipotle's numbers. That's 409 times 9.2. And then I do 23 times 1,500. I think I got it backwards. Yeah, they're 34,500. And we are 37. Yeah, we're pretty close, actually. So we wouldn't hit exactly the same as them. They're they're 34. Oh man, I am so bad with math. Oh yeah, okay, we're a tenth diluted. So we could hit 150. Right, because they're 34,500 and we are 37. Yeah. Now is that a 10 in the dilution? Thanks, Belts. I knocked you out. Yeah. I'm just trying to do math while we're going sideways. Sorry for putting you to sleep, Belts. I'm really bad with math. 409 million outstanding shares. So we have $3.7 billion. And then Chipotle has 23 million outstanding. Oh no, so we're a tenth smaller than Chipotle. So Chipotle actually has more money outstanding. I got this right? We have 409 times $9 gives us 3,730. So that's $3.7 billion at current share price. Whereas Chipotle has 23 million shares outstanding times current share price gives them 34 billion that they could raise if all their shares are given. Yes. Yes. That's right. But Chipotle is trading at a 23 times multiple. Chipotle's worth $72 and we're worth negative $6. So that's where this math is kind of getting wonky, because we're taking 1,500 is an inflated price. So we're comparing a company that is worth positive $72 to a company that is worth negative $6. So the math doesn't work, because when you cross zero, you can't divide by zero. So it's not, you can't do this. It's apples and rotting oranges. Or I guess we're rotting apples. Those are red. And jalapenos. That's what we're comparing here. Or no, guacamole. That's what Chipotle's known for, is the guac. Yeah. Oh, we don't even make up AMC Clown Show. I got stiff competition. Actual clowns. Oh, man. All right. Oh, I love trading sideways. So boring. But at least we're just whizzing through space. As long as we stay above 9, then I can die happy. Alright. Yeah. You can divide by 0 if you want to open up a quantum hole through your house. I love those photos. Presses divide by 0 on the calculator. House implodes. So good. Alright, well, let's catch up on the chat. Chipotle, yeah. Chipotle? Ole. Chipotle. Yeah, it's Chipotle, but I say Chipotle because I'm just reading it Chipotle, but it's Chipotle because it's, fancy, right? Well, by fancy, like Mexican is fancy, but they're trying to. It's like when you pronounce something and it's like, use the French term for my restaurant, and you're like, oh, it's foie de grace. Okay, de grace. Make sure you get the accent in there. Yeah, I'll take the foie de grace. Just give me the grass, please. Although foie de grace is pretty nasty. Target. Oh, nice. Target. Yeah, people in Canada, we have giant tiger. And so French is tigre, géant. And so the people call it giant tigre. Or I go to La Tigre. So it sounds fancy. And that's our Zellers, if you will, if you guys still have them in the States. Or if you didn't have Zellers, because that might be Canadian, it'd be your Kmart, if you remember that. Because I think Kmart was American. And then for UK people, that's like your Tesco is your grocery store. Is it Woolsworth? Or is that a grocery store too? Whatever your old school Walmart competitor was. So I know in Australia, I think Woolies or Woolsworth is their grocery store, and that's from the UK. Tesco, I think, is a grocery store as well.
Everyone goes down to the local Tesco. Tesco or Telsco? Oh, it's Tesco. Tesco. Yeah. Yeah, Kmart died like back in 99 or so, and maybe 94. They died a while ago in Canada. Oh yeah, Future Shop. Yeah, Future Shop and Best Buy. Future Shop was Canadian. That one's dead now too. And it's funny because it's like GME. People that love GME don't realize that all the competitors that have come and died are what GME they think they're going to evolve into. So GME survived because they're small and they serve a niche, but that's also their downfall. If they start to expand to be the one-stop shop for gamers, well, Future Shop couldn't cut it. Best Buy struggles. Like Best Buy's doing full appliances now. Like, so unless GameStop wants to compete with a Best Buy, they're going to have to pick a line from being a full Amazon to a Best Buy to a gaming version of something to what they are now, where they're surviving because they're small, right? So I'd like to see how they pull this rabbit out of their ass, but I don't think they're going to manage. Oh, you little bugger. So it hit its these support lines are real. Look at how close that was. So let's just move this support line up. It was at the 50 mark or the 60 mark, not the 00. But yeah, that line, I set that up like 3 weeks ago, and you can see it's valid. It's almost like I know what I'm doing. Yeah, support and resistance, the fundamentals. Just like drawing little sceneries. We fly through the cosmos in our little rocket. So this is definitely a pennant shape. Maybe we can figure out where the breakout's going to be. Since that will give us something to talk about. Okay. You remember earlier I drew a pennant shape. This one sucks. Over all of this chart, right? So as I was saying earlier, there's always micro things going on inside the macro. So even though there's a giant pennant, there's a whole bunch of little pennants going on in the interim. And the micro makes the macro, ultimately. It's the little minutes that add up to the big show. So this bottom isn't great, but it's going to have to do. So the breakout would be like right now, but I don't think that's proper because it needs to be on the same level. So I'm going to adjust this guy, but we don't have a proper side for him. So I'm just going to use the top of this guy and just kind of like, so even though I'm moving my mouse here, which is probably getting your attention, where you should be looking is right here. So I'm lifting this up to kind of open up that gap down there. So I'll line it up with the top of this guy, but we should keep in mind that it could probably be a little bit more. So the top is flexible, but we'll stay with the bottom. And I guess for the long-term viewers, keep that in mind. When I'm wiggling something like this, don't get distracted by my wiggling. What you really want to look at is what I'm doing, what I'm opening up. Unless I'm drawing a circle around something, obviously. Because yeah, this obviously where my cursor's going doesn't matter. What I care about is right here. I want to see where the top is. So let's hope it goes and breaks out. And if it does, there we go. We'll fuel up at the local space station. There we go. Get the rocket pad already. Okay. Let's get a little bit of that. And then because it's a space station, it has to have solar panels. Random weird stuff like antennas that, we're 1,000 years into the future and they still look like aerials from the 80s. But we'll just ignore that. Okay, done. All right, let's go. Let's go rocket ship. Oh, and because it's part of the Lemon Collective, gotta get some branding in there. We'll put it on the lemon pad. There we go. That's Sergeant Lemon or Lieutenant Lemon overseeing space operations. There you go. Yeah. If you buy this washer machine, we'll give you. Oh, looks like it's going to break up. Nice. If you buy this washer machine, get a free copy of Gears of War 3. If you trade in your PlayStation 4, we'll give you a toaster. Oh, what a deal. Yeah. In an attempt to bring in housewives. Yeah, this is a really good washer machine, It syncs with your PlayStation 4. You can fit like 50 games in there. Put it on tumble. Bam. Your CDs are all clean. Yep. I think that's the future. That's the sell. Yeah. Yeah, we might. So there's a little bit of recovery starting. So this might be what gives us the kick in the pants to break out. Yeah, see? And so we're really close to a breakout right here. So if we get the kick in the pants, that might give us the breakout. This isn't really a true pennant, but you can kind of extrapolate this to here. Then it would be a true pennant. But the bottom might be incorrect, but the top is definitely correct. And then if the pennant isn't true, you could still do a channel, and the channel would be this. So if it goes below the channel, it would break down. But if it goes out of the channel, it breaks up. Or up, right? So either way, the top of the wedge is still valid. It's the bottom that could be adjusted. But this top, if we take it as a channel, if we take it as a wedge, it's going to be the same position. There's no way for me to lower it, right? And I can't sharpen it either. Like if I drag it to this guy or this guy, like there's my pivot point. I can't go anywhere. So I think the top, we're talking about a difference between this and this. I think we're good. Wherever the line truly is, we're probably really close to it. So we're just right on the edge of a breakout. Now, since this didn't break out, what we can do is we can... Oh, shit. Whoops. How did that fuck up? Okay, sorry. So that would have been our breakout right there. But since we didn't have a breakout, then I'm going to put that here. We'll readjust with the new data. I thought I was on top of the stick here. And then when I looked, I was like a couple millimeters above it. And I'm like, yeah, I can't have that. So here we go. So, yeah. And even if Here, I'm going to lower that down to here. You can see that one touches it. This one gets close. So this is the more of the channel versus the wedge. This would be more of the wedge. But a channel is pretty much the same thing. A channel is a declining top, declining bottom, or a rising top and a rising bottom. Whereas a wedge or a pennant is declining top, rising bottom, or actually no, that's or flat bottom, flat top, and one of them has to go down or up. Yeah. Right, that would be it. Or a channel, they're in parallel. That's right. Yeah. Yeah. Yeah, there's only two ways a stock can move, up or down. So there's a limited amount of patterns that can be made. Yeah. So I mentioned that yesterday. The increase in capacity is nice. We're going to see that, and then when they release their financials, which I think is, let me just take a look here. Where is it? Status? Nope. Where is the... Oh, here it is. Show earnings on charts. Yeah, so it's there. So maybe I have to... Oh, I have to be in the right view. So that's the last one, and the next one is here. Okay, so it's still set up for May 10th. So not too far away. We're looking at... That's going to be a Monday. Ooh, that's good. Ooh, that's going to be really good. It's a Monday, and it's going to be good numbers. Yay. Well, it's going to be better numbers, not going to be great numbers. So that will cover the period from January to February, March. That'd be, January to March. Because our last one did to December. And then this one would be January, February, March. Yeah. And then the next one will be April, May, whatever. Yeah, it always lags by one season, one quarter. Okay, let's go back a little closer. 1 minute. Go. All right. Let's get this rocket going. Come on, give us a breakout. Just go back to our humble space scene. I can't see the breakout, so I guess I gotta have to zoom in. Okay. There we go. Okay, oversee the launch. Let's get this baby going. Oh, we might get a boost from the 2 o'clock, just because we're gonna have a breakout and a time-based breakout at the same, or a time-based event. Shouldn't say breakout. So whole number times are psychological. So you can see here, look at the volume. So if the two are meeting and it looks like we're going to go up, then we'll get a boost from the 2 o'clock, which we might have already just saw. But we'll see what happens. It's Mortal Kombat. Oh yeah. Can't wait. That's going to be so good. Excellent. All right. Yeah, I'm just checking out my video feed on YouTube. It doesn't look too bad. In a small window, it's all quite readable. Yeah, I could shrink this stuff down a little bit. But then it's good on mobile without having to turn your phone sideways. But I made the chat really small this time though. So that chat, if you want to see it, you'd have to full screen. It's a small concession I had to make. Works. Doesn't look too bad. I switch over to theater mode. Not bad. The compression isn't too bad. How bad does it look at 720p? Not bad. Fuzzy, but doable. Let's set it down to 144p. You can barely make out what's going on, but it still holds up. Hey, not bad. My stream will be popular in third world countries with horrible internet. Okay. Da, 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 da. So let's look at the larger picture. So she bounced and went sideways. There's a kitty cat. Maybe this is a bat. There you go. There's a bat. Another one here. And a really deformed one here. So it looks like the whole market is just moving by itself. So that's indicative of a big fish, bigger fishes moving stuff around. Because that kind of symmetry is really portfolios. Yeah. But GME is not looking good. They basically have nothing but negativity. All of this is pointing this direction, right? This one here is doing this, but it's only about yay big. Whereas everything else on this screen, right, is pretty much, except for that and that, Those were the two redeemers. Oh, and that one. But everything else is blank. Oh, I guess that too. There's that. Shouldn't forget that. But yeah. So actually, this is a good learning thing. If you do your charts like this, right, with the arrows, you get a feel for the gravitational pulse, and so you can see how much is up and how much is down. And there's a whole series on the angles you can even learn. But essentially, the steepness tells you the intent because it's measured. You're measuring a location over time. And when you graph that, that gives you your shapes. So the location is the price, and the time is showing you the variation over time, right? So that allows you to then see motion, relative motion, right? So anyways, this is pretty useful. I do this without drawing, but this is what I'm looking at every time I look at a chart, because then you get a feel for when they recovered, what angle was it? Was it this or was it that? If it's this or is it this, it shows intent. It shows power, right? So, yeah. Yeah, so they're not looking so good. But GME has come back from deeper graves. Like here, look at that. That's incredible, right? And then they have another one. We go here, right? Like that. Their second wind was amazing. Like I had them marked for dead, and then they just hit, like here, they just hit the gas, and it was like, oh my god. That was 6 times increase, 7 times increase. Yeah. And then now they are down 44%, and they dropped to 54%. So, and they definitely look like they're doing a pennant here, or at the very least a wedge, whichever way you want to slice it. You could slice it that way to that one. So, yeah. So they're going to have a breakout or a breakdown really soon as well. Yeah. Actually, they're going to have a breakdown. Yeah. But I called that a while ago. So I was just looking at the daily charts, right? But the daily charts are telling me the same thing as the macro now that I just looked at it. But they're not far from taking off either. If I adjust this to maybe here. Yeah, because when they come out of this U shape, there's a micro U shape here. Then they'll get a boost, which will give them a boost, which is basically what this line's representing. So then they're going to be about here, and then they're going to hit some resistance here. So that's going to be their breakout, essentially. Because the wedge shape is just, this line is not magic, but the line appears when magic's about to happen, but it's because of other factors, and the line just happens to then be the important line because of the other factors, but it's not the line itself. It's going to be the completion of a U. It's going to be a completion of this, but it just happens to be right here. But it'll be 177 or 184. So that's good. If GME has a breakout, and their breakdown point is pretty close too, but they've managed to stay away from it. Their breakdown point's about 150. 155. As time goes by, their breakdown point will rise. But that makes sense too, because they're riding along they're riding high, and they're riding along what their company is worth. Their company is declining over time in value. So basically, the breakdown point is rising up to meet them, where we're the opposite. We're gaining over time in value. So our bottom is coming up to meet us, to support us. Yeah, that's one downside to GME. So it looks like he didn't get a good breakout. If this was the breakout, it was really shitty. And it's looks like it was. So we broke out, got pushed down, went for round 2 and didn't go anywhere. Got stuck at 915, which is, I'm not seeing any support over here. Yeah. So when I'm wiggling my mouse over here, I'm just using this dashed line to look over here to see where the support is. Could be this guy here. It's an odd spot to stop. Yeah, that is a weird spot to stop. Okay, well, let's adjust. So we didn't get anything really from 14 o'clock. Oh, maybe it needed a breather. What's the volume? Oh, that's why. Okay, that's what's happening. It's the volume. I was looking at the volume and I'm like, this looks reasonable. These numbers are in the hundreds. So that's what happened. It's low volume. Yeah. Okay, so there it is. Okay, good. Oh, I swallowed a kitty hair. Either that or I just got COVID. Okay. No, no fever. All right, let's stick the rocket up the ass and launch. So this is what I was expecting 5 minutes ago. But when you have really low volume, things get delayed and drawn out. And here you are. That was weird though, that red sell-off, but that was only 1,000, so that could have been anyone. So really, this should have been right here. So as you came out, then you would have your red right here, which you did. There's a green here that's pushed down, and then all of this should have been right here. If it was a faster day, it would all have been right here. But I guess the low ass volume. And like this one's weird. See how the red is here? So what happened there is it gapped up, it jumped up to there, and now it's coming down. You don't normally see that. Because with a candle, if this is green, then the red would start here and you'd have green red. But if it's went up, it would be green green. So the red doesn't normally go above, let alone stop right on top. Oh, but yeah, this volume is killer. Okay. Yeah, I need to entice it with. All right. Hop in. Up in the rocket ship. Look, Mr. Lemon's in the rocket ship. You like lemons? No, we're not in power hour yet. Power hour's in an hour from now. Well, 40 minutes. It's 3 o'clock to 4 o'clock, and it's currently 2:11. Or for you 24-hour clock people, 15 to 16. And we're currently at 14:10. At least we're getting a little bit of action here. What about the wider markets? So if we look at the watch list, GME is $6 or so away from fatality. The Dow is still going sideways. So if I recall correctly, the Dow is trading between negative 0.75 and where it is now. So it should be at the bottom of its trending. No, it's still in the bat swings. Okay, so its bottom is 730 and 748. So it's a little bit up, but it's still, this is where I remember it. Still along the, could be worse. S&P, same thing. NASDAQ, same thing. They're all making bats. If I do recall correctly, somebody calls stocks this shape a bat. So this is the bat shape. And I like it when there's little ears. That's when you really know it's a bat. Yeah. If not, it's a W. But in this case, you got little bat ears. The S&P also has bat. And the Dow clearly has a really angry bat. There we go. Okay. GME is just chucking along. Eventually they're going to run out of runway. So we're looking for 154. Excuse me. If we hit 154, GME is going for a ride. If GME goes up to 170, we're going to make some dollars. Okay, they're still deciding if they want to board the rocket ship. Yes, it's a fat bat. If that's tats or fats. Can't see from here. That is tats. Okay. That was just a fat bat. Well, I hope the day's a big U. That would be good. If we could go up 4%, that would be a-okay with me. And it might be the case. We might be, if I zoom out, I'll have to delete my lovely drawing because I can't see shit. Yeah, I think it's more of a breakout. So you have, this is the one channel, the top of one channel. And then this here is the top of another channel. And then now We just had a breakout from this one. So now the next major pain in the ass is going to be somewhere around here, let's say horizontal. So we went from going this way to going this way. Now we're going this way. So we'll go like this. And then hopefully we go like this. So we'll start to speed up now that the negativity is off of us. And then, yeah, let's hope we complete the U shape. So far, so good. But if it is to fail, we're in the corner of the U, right? This will be the point. Then the next point will be this guy here. As it completes the first U, it might decide to roll. Or because it's the 50% mark of the larger U, it might decide to roll. So there's two negatives working against it at 9:30. So that probably will roll. Then I think we'll run out of runway. So we won't make we'll roll, but we won't make an S because we'll run out of time. It'll be end of day before we hit it. But anyways, let's see how that how it plays out, because it's quite possible. We just completed a U shape here, and we got another one right here. So we're going to get two boosts from each of these guys. So we should get a lift. If we just go up a little bit more, we should boost up to 925. And then, yeah, then we have to climb this. This is going to be a pain with our volume. This might hold us up for the rest of the day. But if we can get over this, then this is a pain. This peak and this valley are basically going to stick us as well at 37. And then once we're over 37, then this is a pretty easy climb till probably 53. Yeah. 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 Well, let's see. Let's not count our chickens before they hatch. There we go. Ugh. What's the large volume here? We're only at 21 million at 2 o'clock. That's 10 o'clock numbers. Yeah, we definitely slowing down. I see the volume here, and then look at the volume now. That's why it's so slow. That's what caught me off guard. We basically just plummeted after 11:40. Sad pandas. But this wasn't even big volume to start with. Like these are 1s and 2s and 7s versus 10s and 20s. But this is pitiful in comparison. I think we could all take a nap. It's gonna be... I'll change the title of the channel to AMC Nap Party. There we go. Lemon stock trading, wrinkled brains only here. Everyone gets a blanket upon joining the channel. Dog. Oh, don't have a nosebleed, Mr. Alligator. Or crocodile. Well, a blanket you can turn into a pillow, but yeah. Guess I need to make some coffee when this is all over. I'll have to wake up. Might be getting a breakout, or not a breakout, well, technical breakout right here. Oh, it's just watching this in slow-mo. It's like, not Avengers, actually, no, it's Justice League. It's all the fucking slow-mo sequences. I mean, I don't mind it, but Snyder loves this slow-mo. Oh man. Maybe that's what I'll add to my my shop, AMC nap time pillows. I'll go talk to AMC and get officially licensed logo usage and put it on pillows. So you can have a nap on your AMC pillow while you wait for the stock to make you rich. I should email them. See if I can make AMC pillows. with legitimate trademark usage. But I'd probably have to attach a tag saying, you know, trademark is blah, 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 or at least something when I ship it. And if I add to the share price, I wonder if that's illegal. I guess not. I'm just generating revenue for a company that I have shares in. That's, I guess, a form of pumping. Except not. We'll figure it out. Not sleeping advice, just nap advice. Yeah, you got it. This pillow is not for napping. It's only for entertainment purposes only. Please do not sue if you fall asleep while using this pillow. Yeah. So this might be a W, a really, really tiny W. So if this is green, which it's not, it's a continuous red. It's following my alligator's nose. So if this turned around into a small green, then we would have a W. But now this one looks like it's a small crown. So the green going up, there's the peak of the crown, there's the middle, and then the last four are the end of the crown. So then now the crown's completed, should go up. But it's hard to tell because the stock is so tiny. Could be a dome shape, which is a longer version of a crown, essentially. Same psychology, but over a long period. Yeah. So that's it correcting because it went too far. Normally you would have the green bounce immediately after the completion of the crown. Unless the crown's coming down with such speed because it's such a huge drop. But in this case, it's microscopic. But I guess because of the low volume, it oversold. So then this is the green from the bounce, and it's also the correction. But the reason I mention this is now you're going up. So instead of it being the actual bounce from the crown, this is now the recovery because there was no bounce. The red went too far. It went through the line. So now you're underneath the line. So now it becomes infinitely harder, and the chances of going down are much higher. Whereas if we stayed above the invisible line, which is like 1 cent higher, then we would have the support of the line, and it's nothing but sky, basically. Or this is the opposite. So not so good. Not horrible, but just to keep in mind there's a difference when you're above or below the invisible line. Because we essentially wasted our free bounce and used it to get ourselves back to the line, only to be defeated by the line. Now we're on top of another line. trying to figure out if we're going to go down. Um, a guy with his head on fire. Oh, that's what I should do for the thumbnail. I should have Bob Ross, and then he's just painting stocks. So I'll just put my face with Bob Ross's afro, and call it the joy of stocks. There we go. I think we got something. There's no such thing as market crashes, just happy little corrections. Good times. Always forget it's this guy I want to adjust. Him here and there. Could do that, and I do this. There we go. Okay. The bottom, the top, and then this goes to the top of the or whatever and gives you a channel. So I could do that bottom, top, and that would give you a sideways channel. Hey, not bad. But realistically, it's here, here, and this is the midpoint, so we're basically doing that. Yeah, that's much better. It's not what we want, but that's proper. That represents the lower quadrants, and then the two middle quadrants. So that's probably 25%, 25%, 25, 25, so 50 and 50. Or 50 and 25, 25 is probably how it is. So, what do we have here? We remember we were talking about the U shape. So we would have failed at the corner of the U shape, but there was a pennant or a channel and we broke out of it. But if we were to complete the U shape, the one would be here, the other one is here. So we completed this U shape. We didn't die at the 50% mark. We instead boosted just before it. Now we rolled, which is this piece right here. And then we didn't get any height, so we collapsed So then we're going to probably find support along this middle line here, which is where we are. And then that should be our outward shape, which gives us an S shape, a very elongated one. This is the roll on the corner of the U shape. So that's normal. But it's this piece that gives us our power. Let's see if that plays out. Yeah. Because normally that if this was very positive, this would just be very short. But we went too long, so we collapsed, which is normal. But we can still recover it. And then we just make a really shitty S shape because there's like a lag here. So we'll see. Someone referenced Decker Kane. My personal favorite. Stay a while and listen. Sorry, I don't always see the chat all the time. Go and make him a little kawaii, so his cheeks are here. Oh, dinosaur san. Or no, oh, T-Rex san. That's it. Get some stars in there. Okay. So what did Brittany ask? Oh, she's just confused. Oh yeah, welcome to the confusion. No, when the stock, we got super low volume. So when the stock is basically just pissing away sideways or whatever, I end up drawing on the chart. Because, yep, there's nothing else we can really do. We can't force the market. Usually we summon up some lemons. But maybe I'll get some flying lemons here. There we go. It's Dinosaur San and his lemon castle, his moving lemon castle. Studio. MC. Yeah. Now he's intent. Yeah. There you go. Oh, and I guess I could, to keep with the cuteness, so it'd be yeah. And actually, because I want to give it a mustache, there. Yeah. Cute dinosaur. Mischievous. Oh, no problem, Brittany. It's fine. Yeah, this channel's a little less war against the hedgies because you know, that war is kind of fake, but I do like sticking it to the hedgy mans as well. We got 16 dislikes from earlier from people that are pro hedgy, and what else did they not like? Oh, the English Soccer League. We're playing around with the titles, and apparently there's some English Soccer League haters. I wish I could animate this so you could just have floating lemons, kind of like a mystery. The what are they called? Little sakura petals, but instead of sakura petals, it's just lemons floating. Yeah. ESL. Also, English is a second language. Yeah. Oh, yeah. So he's dinosaur by day, El Lamedado by night. Na secret lemon man. Solves crimes with his lemon mask. It's great. It's great. Well, we had a crocodile here, but it's no good. Sometimes we plant a lemon tree. Whatever works. Open up a portal to hell. Do, do, do. Throw off your perspective. This way. If I draw things in a perspective, then the chart will look different. There you go. Now the chart should look like it's going this way. Now if I now it's a falling lightning bolt. Something. Got nothing else to do. Yep. Yeah. Yeah, don't tempt me. I can do worse. I could do worse. But yeah, we're just waiting for either a breakup or a breakdown. You can see that there's clearly an indecision pennant forming, but we're not getting the volume to bust out, essentially. We did have a breakout right here, but then it just came right back. So, on the zero-ish volume. So technically, this was the end of the first one, and we just started a new one right here. So, or you can kind of think of it as a continuation if you just ignore this piece. Either way, somewhere around here, we're going to have another kickoff. English Premier Soccer League kickoff. So now you have an increase in volume. So that's because of this. It's breaking through this black line, if you will. So once it gets through this black line, it's going to take off. Where's the other guy? Oh, here he is. So if we use this guy, and we ignore, or is it this guy and this guy? Yeah, that's that one. Where's this one? This one and... How did I draw that one? This and this? Okay. I don't know how I drew the earlier wedge that looked good, but this will do. Put it on the top of this. This will give us our top. And there's clearly one here. So that should be the breakout, but we'll adjust it to this green. So somewhere between here and here, we should see a boost. And that will tell us which line is right. Doing microscopic stocks today. Here's a channel on the minute scale, and it's 3 pennies big. Oh my god. Such a garbage day. Yeah. And is that where we are right now? It is. So we did a dome shape, went under, came back, and now we're just trailing around the line. Is this still today? Nope, that's the 16th. Yeah, so we've just completed the dreaded dome shape. Went for recovery, and we went down like 3 times as fast as we went up, and that's today. Yep. Yeah, so we're actually doomed at the end of the day. Even though we got that nice recovery, it basically just prolonged. Yeah. Shame it didn't go the other way, but because the cresting was technically here, but you couldn't see it because of the recovery. So I guess that was like 50-50 overnight. If it was positive, then we would have just gone into another shape. But because it was negative on open, it doomed us instantly. Ah, damn. Sucks. But overall, we're on the mend, I think. Perhaps we're going to make a giant W. So if this goes, we might do that. There's a giant W. Usually the middle's a little sharper, but that would get us back to 10. And some rad sunglasses. Yeah, it looks like that line is something. It's fighting over it. So we should see green. If it's not, it'll go sideways or do its thing till it hits this, or it goes back into the channel and bounces its way down. So it's 10 minutes to power out. So we'll see. Yeah, I can explain things. That's what we do here. Or at least what I do here. It's not really a we, but some of the people help. Oh, don't worry. It's all good. We normally have 60 people in here, and lately it's been 20, 25, 30. Right now it's sub 20. Everyone else is feeling the pain. But anyways, to answer your question, Brittany, um, short interest rate, just quickly Google that, just so I get the exact wording, so I don't fuck it up. Because there's short interest, as in how many people want, and then the rate is the percentage money. Yeah, so this one here is the interest. Okay, so this is not the interest rate. This is the short interest, as in how interested they are. So it's the number of shares that have been sold short, but have not yet been covered or closed. So that's the open meaning it's not done. Amount of people that are shorting the stock. And it can be used as an indicator of market sentiment. Right. So when we're talking about short interest, in this case, then this is going to be how many people have shorted the stock. So if it gets lower and lower and lower, it means less and less people are shorting the stock, which means it's more and more likely to be positive. Or more accurately, the people that thought the stock was bad, less of them are thinking it's bad. Therefore, it indicates positive times ahead. Doesn't guarantee them, but it indicates that the negative Nancys are less negative Nancys. And they're less willing to take on a negative position or bet on it going down, which means they think or they fear it's going to go up. Well, they might know something or they might just be scared. Either way, it becomes a self-fulfilling prophecy. If no one shorts, the stock can go up easier. But anyway, so that's short interest. If we're talking about the short interest rate, let's say, which people talk about a lot, all the YouTubers, that's going to be how much money they pay to maintain their short position when they borrow the shares from somebody. Those ones get screwed up from time to time. So that's shown as a percentage, like 20% cost to rent out those shares. And that's why I always get thrown for a loop. Yeah. Does that work for you? Oh yeah. If I zoom out, we did go up from where we were, probably pre-nap. We finished the crocodile's nose. Oh, I think that's our breakout. Yeah. So that line was a real line. And this is probably going to be maybe resistance. We'll see. The second line shouldn't be a line, but we'll see. Yeah, if she buys shares, it goes down. If she sells shares, it goes up. Yeah. So if we're talking about short interest, from that standpoint, I think they're talking about the interest as in how much people want to short. So right now, it's 20% of all the shares are shorted, is what that would say. And that number should be declining because of the new laws that are coming out. A lot of positions are probably being closed, and the gambling is probably being reduced until after the law, because the DCC law or whatever it is, before that law comes out, they're telling all the I don't know what they call institutionals, I guess. Well, they're not really institutionals, but the people that are the big fishes, the banks and the Goldman Sachs's and friends, to go find out that all their people that they loan money to make sure that they're all solvent, that all their positions are coverable. And so basically, you're going to see that a bunch of them aren't, and likely they're short sellers, because if they're holding long, it's a lot different than when you're short selling. And so we'll have reduced short interest as they find out that a lot of their loaned people are no longer there, or the shares gone missing, or they're bankrupt, or whatever. So I would not expect the short interest to go up before the 22nd, because that would just be weird. If we're talking about that one. If we're talking about the interest rate, then that number just changes based on availability. So if the banks and stuff don't want to loan out the shares, they'll just charge more and more and more and more because they don't want to loan it out. And that doesn't matter either. If that number gets really high, then it will squeeze out people. But realistically, it would have to get really high, like 100. And then it's going to squeeze them out slowly. So again, doesn't really matter. Just garbage people talk about, I guess, on YouTube to fill the time. Yeah, no problem. Financials ain't that hard. Well, math is hard. Adding is hard. But the general concept ain't that hard. Company get richer, stock go up. Company get less richer, stock go down. And then the confusing part is company worth negative $6 per share, stock still go up. Company facing immediate bankruptcy because their model is outdated and nobody wants to go to their stores, stock go up 700%. So even though fundamentals may exist, it doesn't mean they're followed. GME is a prime example. Yeah. How does a company that's circling the drain go up 7 times? The company just became 7 times more valuable. It's like, no. And I mean, 7 times doesn't seem like a lot, but if you think of it as, if I was a company that has a million stores, I would have to be a company that has 7 million stores in whatever span of time we're talking about. So you think of it not just like I have $1, now I have 7. You're 7 times bigger. You're 7 times more prevalent. You're making 7 times the money, 7 times the staff. Like, that sure as shit didn't happen. So, yeah, man. Just nuts. Straight up nuts. At least us, our value comes from recovering. We're a recovery play. And what's killing us right now is the damn pandemic. But once people, don't care, and the United States really doesn't care, so they're going to reopen as quick as possible. America is very capitalistic, they will sacrifice people for the economy. They will, and they already have done it, and they'll do it again. So, yeah, I think we're going to see a good earnings coming up, which means we're going to see positivity before we see negativity. We just have to get over this little hump. Yeah, I think the Israeli news on the new variants being vaccine resistant spooked the market. That was yesterday or 2 days ago. I could probably find it, but we quickly recovered from that spook. Oh no, not GME. It would be right. Where did we drop? Has to be somewhere around here. So at a drop, we recovered from it instantly. Could maybe be this, where it's 19. Dropped, and we recovered. Then we kind of teetered out. Yeah, might have been that. So it might have been here when they. So that would be yesterday. The news on the vaccines. Because if we go further back, it doesn't show. Unless it's here on the 13th. But that's a whole day to recover. But anyways, point being is the pandemic is really muting the market. And anytime there's news about the vaccine's not working or working better than expected, or stuff like this, it's Americans are being vaccinated more than ever, so it boosts us up, and then we just kind of go flat, and we get boosted or we drop, and we go flat, boost, flat, boost, crash, flat. And now I don't know what's really driving today, but today's a pretty negative day. So Bank of America dumps U.S. stocks as euphoria is over. Virus spikes hit travel stocks. Europe has its worst day of the year. Yeah, so some negativity. Europe was not doing good. I looked at Europe this morning. Look at that. That's the UK, Germany. Just not doing so good there. At least we're going sideways. So tomorrow when they open, they should recover. But they basically got sacked in the nuts. And the UK's been on a bit of a slide for a couple of days. At least a day. Yesterday and today. Now that today's almost over. Oh, well, today's over for them, but yeah. That might have been 2 days. We adjust for the time zones and stuff. Anyways. So yeah, we're just waiting for this thing to break over that black line. And that should give us a kick, an up kick. Pretty close. It doesn't want to do it. Doesn't want to show us the money. AMC is not being shorted too much. I just looked it up, about 1 in 30 shares are shorted, which isn't that bad. But I guess it could be less. Like, I don't know my short ratios, but if it was like 1 in 5, it's not too bad. This is 1 in 30. So at least I think, if I did the math correctly. I'm not really good at the maths. I can barely add, but I can trade stocks. It's I let the machines do the thinking for me. Let alone I can't do basic math multiplication. But the stocks are easy. Just patterns, shapes, and probability. It's balancing as fast as you can. Balance, balance, balance. And then you have some secret magic lemons in your pocket. That helps too. Hey, where Jared's back? Luck is what you make of it, right? Yeah. If you're finding you're always making the wrong choices on the stock market, it's generally because you're being triggered by the stimulus in front of you, and then you're making a choice that's wrong based on the stimulus. So either the stimulus is triggering you at the wrong time, so you're seeing something and you're seeing the wrong thing, or you're attaching the wrong reaction to the thing you're seeing, or both are wrong. You're seeing the wrong thing and you're doing the wrong thing. So just analyze what you're doing, and then basically correct it. So if say you're drawing wedges, and you know you're drawing the wedges right, but you're acting on them wrong, so you're acting on them in the wrong direction, then just start correcting that action. Every time you want to go to sell, you go, no, wait, this should actually be a buy because I get it wrong every time. But the caveat is that you need to make sure that it's the action that's wrong, not the stimulus. Because a lot of times people are doing the right thing, buy low, sell high, or whatever, but they're getting triggered by the wrong stimulus. They're looking at the chart and seeing it wrong. And so they misinterpret, okay, I got to sell before it turns around. That's correct. But they're misinterpreting the signals, so they're selling early, or they're panicking when they don't need to panic. And so that's more common, is that, but that comes with knowing the stock, feeling the stock, then you can better judge it. So anyways, don't beat yourself up. It comes with experience, is the moral of that story. Luck is what you make of it. I'm currently stuck on $14. I bought yesterday with my my option money, right? And here I am. I'm down 5% on what I bought yesterday. But I'm not going to beat myself up over it. It'll all come out in the wash when we're back at $30. Just going to be a long ass waiting game. But once I get my money free at 14, then I'll start doing a lot more day trading. I might get a few more stocks in play if AMC is going to continue to be a slow horse. Because it's really painful for me to sit here all day watching this thing go, and it's so slow. Like, this is only 6,000 volume. Like, that's the kind of volume we get in the morning, and then that's even low volume. It's horrible. This is so slow. And so there's our breakout, and it's like, oh yay, we made it to 25, which is this guy here. So we completed the U shape, this guy, finally. And then we're going to roll a little bit because we have so low volume, and then we're going to attempt to go up to 938. Which means this will probably look like this, and then hopefully that. Or it'll be this, and we'll do this and do another U shape, or who knows. It's put that there and there. So it's, we'll see. What do you mean exit your position at 14? Oh, if it hits 14, it's all about momentum, right? So if we're coming up at 14 at like Mach 1 speeds, it would be very stupid to sell because we're going to blow through 14 like the speed of light. But if we're struggling to get to 14, I would sell the second you touch it because it would just take a gust of wind to put us down, $2, right? And then just buy lower. So it all matters on momentum. And that's why when people give hard numbers, it's like, unless that number is like 10 minutes from now, you have no idea the sentiment that people would have. So, I'll sell when it's 15. It's like, but what if it's going Mach 1? Or what if it's going slow? You might even sell at 13, take the $1 hit because it's barely struggling to get to 13, and you might not want to wait another 2 weeks. So you can make that decision, right? But if you're a long-term trader, you're like, oh, I'll sell when it hits 30, and you don't specify a time window. Okay. So it's 30, 3 years from now? Or is it 30 in a month from now? Well, I'm going to sell when it's 30. Yeah, we might all sell when it's 30, but you never specified the time window, so it becomes irrelevant because do you want to wait 3 years for tripling your money, or do you want to wait 1 month, right? I prefer the 1 month, but the odds of that happening are near zero, right? So, yeah, anybody can say anything, but you have to qualify it for it to be valid, or at least reasonably sane. So, what about audio? Lemons? Okay. No, no, you'll be on your deathbed, Marshall, and you'll be like, how much is AMC? And then Zach will come up beside you and go, $5. And you'll be like, oh no. And then you die. Zach will be there. He'll be holding your hand or something else, depending if you paid him. And he'll whisper into your ear. or you'll be like, come here, grandchild. Yes, Faja? What is AMC? Little Zach? It's where it's always been. $5. I can die now in peace. For my work here is done. Yeah, you gotta name your little grandkids Zach 1, Zach 2. Or no, Zach 5 and AMC. There, that's what you're gonna name your kids. $5 Zach and AMC. Yep. Good stuff. Alright, maybe this chocolate will wake me up. I'm dying here. Maybe it's free. Yeah, he that should not be named. Name your kid Diamond Ape. I like it. uh, so it looks like we're going for the S shape at snail speed. So that's good. So the likelihood of this one is declining. There we go. That's going to be our new thing. Just $5 hands. Father, I don't understand why everybody's putting $5 hands in the chat. Ugh, it's all good. They're just cheering you on, Zach. So the bid and the asks are really huge, but they're not agreeing on any numbers, so we're not actually moving. That's great. Did the market maker like break or something? Kind of weird. Just a lot of limit orders, maybe? Yeah, yeah. I'm just changing up the titles, seeing how many people I can offend. Okay, so there's the power shape. It's a little dragged out, but we went up, we went down, we went up, then we went down, and there it is. So it's there. It just took its dear sweet time. So now this should start a bull run. So as long as we don't have over a 50% retraction, we should keep going up. And then we can have a run right to the end. That'd be awesome. So if we keep this trend, we'll be following this black line. Or actually, following this black line if I put it in the middle. There we go. Do, 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 do. Um, there we go. I updated the title. And I'm going to change the thumbnail to see if when people search for end of day AMC, if we get people. I'm going to use my my blue picture here. This one, if for anyone that is new, it's. I'll see if that catches flies. There we go. So we're following the black line, so not bad. So we had a ramp up of volume, which was good. The reds aren't too strong, so everything's still looking good. If this becomes a powerful green that goes back, or actually goes 1 cent higher, we can't really see it, but there's a green here, a powerful green. So that's actually making an S shape. Oh my god, this is like, it's like watching ants. It's like micro, we gotta zoom in. So we have this, we have this, and we have this.
and then we had this. So if that would have went up one more, that would have made the powerful shape. The runes, the power runes. But so that failed. So we ended up getting, instead of going up, we ended up getting a red. But we can kind of lump these all together, and if we can just get a green, that gets us a little bit of height. We're singing. But it needs to pull head from ass. Yep, Marshall's got it. Yep. Yeah, I'm not really down with the financials. I use them to check out a company at the very beginning, and then I basically follow the stock daily so I can feel it and understand it and know how it moves. But yeah, the biggest takeaway from the new DTCC stuff is that they're trying to make sure that the market doesn't crash because there's all this mystery money that's not collected, and then they find out it's not there anymore. So they're putting in regulation to kind of curb that. But they can't put in real-time regulation because the stock market is delayed by 3 days. So, and they need that time as a buffer in case something goes wrong. So, but Citadel wants it to be, I think they want T1, 1 day delay, and we're right now T3. And we can be T2. The market would run on T2. But, oh, thanks. I've been trying them out, working it. Oh, the new thumbnail's got a few people in. Yeah, we're just watching this baby, seeing if it's going to make the magic S-shaped rune. Give us the... Although it's kind of an N, but it's the motion it makes as an S, or serpentine motion. There's nothing wrong inherently with the dark pools. So, say you're a corporation. Actually, no. Say I'm me, and I own a lot of shares, right? And you want to borrow some shares. I could put them on the market, and you could buy them on the market. Or we could strike some agreement, and I could loan them to you. Or sell them to you, right? So a dark pool is just a sub-market to facilitate trading at different prices. Because maybe I don't really want to sell them to the market. I could, I could sell them to the market for $9, but maybe I'll give them to you for $10 a share. Or no, wait, no, I'll give them to you for $9.10, but you got to take all of them, right? That would be it. So I'll give it to you as a discount, but you got to take all of them. Now, in the case of, you could just sell to the market, I guess, in that case. But there might be cases where it's something like that, right? You'd pay more, you'd pay less for a package, or you borrow them. Maybe I'll give them to you for $2 a month, or something like that, right? So that's the idea of a dark pool. It's just allowing you to handle all this. Yeah. Well, the hedge funds would be affected by the DCC, right? It's just the ruling, if I remember it correctly, is just trying to if you got all this shit going on and all these private deals and all this going on, at the end of the day, nobody knows what the hell's going on. So eventually it all gets sorted out in the wash. But when things go wrong, it's like, well, how many pairs of socks do I have? And okay, I traded a shirt with this guy and got 6 shirts, but then I loaned out those 6 shirts. We don't really know what the hell's going on at any given time. So they're just trying to make sure that if you're going to do this sort of stuff, that there's at least some clarity, and so we don't have another stock market crash. So at least that's what I took away from it. Yeah, so I'm just reading an article here. The way they explain it is that the DCC is going to remove the requirement for them to confirm its activities monthly through the inquiry notification system. So that's where public companies, firms, whatever, that comply with the SEC or have to comply with the SEC would tell them, here's what I did, here's what I have, here's my holdings, based on certain rules. Like if you hold so much of a company, you have to tell the SEC and blah blah blah. So they ditched that rule, but they added the rule that hedge funds have to contact by phone and through a form for any discrepancies, which is basically saying at any point they have to tell them their position. So they have to keep their money flow balanced, or the the DTCC could call you up and say, what are your positions right now? Previously, you would just report them monthly. Now, if your money is missing, so you're, let's say you have a naked short, so you lied at that very moment that you had something, and you basically don't have it, but you take the person's money anyways, and you give him fake shares through the machine. So you have synthetic shares that you just gave to this guy. You have his money, but there's actually no shares in your possession. But you're going to use that money to go get the shares from a friend or whatever at a discount price. If they called you at that very moment, there'd be a problem. And so that's what they're trying to do, because the market gets caught with their pants down basically all the time, because this is going on and then something happens and they're like, oh shit, I was in the middle of doing this witchcraft and you broke my salt circle. Fuck, there's demons. So now you're going to have to make sure that if you're going to commit crimes, you do it really fast, because that's not inherently illegal, but it's illegal if you get caught, and it's illegal if it fails, because you don't have to technically have the shares until 3 days later. But what ends up happening is something goes wrong and then you can't get the shares. And then all of a sudden, that guy that you said you gave the shares to, you didn't actually give to, isn't going to get them, but you don't have the money anymore. And then all of a sudden, okay, fuck, there's $5 billion that's missing, or whatever that Huang guy's missing. He had a position, he lost all the money, but the bank thought he still had the money. So when the bank says, hey, do you want to pay us? He goes, well, I got these shares that are worth nothing. And he goes, oh, shit. And so now the bank's out $5 billion or whatever, right? So that's what they want. They want to be saying, okay, you have a client and that client's doing risky shit. Is he really at that money amount? Well, we haven't checked in 3 months. Okay, go check. Oh, he actually doesn't have any of that money, which means I don't have any of that money because I loaned him money and he lost it, but I thought he still had it. So I'm actually out that money, which means my parent company's out that money, which means the US government's out that money in the GDP. Surprise! And then the whole market goes and has a crash. So, anyways, that's pretty much the new law in a nutshell because that's what just happened with what's his name, the Huang guy. That's what technically happened in the toxic mortgage in 2008, and yeah, that's what happens pretty much every time the market has a problem. Is that they're doing witchcraft and then they get caught with their pants down. And they're also apparently looking. So in the same article, they're apparently looking to push towards the T1, so a 1-day settlement for trades. So you buy them today, and they'll settle by close the next day. Yeah, close next day. So anything done today, one whole day, and it'll be all settled by the end of that day. So that would mean that money doesn't have to stay floating in the air, but that also then cuts down on short selling because short selling capitalizes on the money floating in the air. So I have to give you the shares in 3 days currently. So I take your money now and I got 3 days to hope the price crashes so I can buy it and give it to you in 3 days. But when I buy it, the dude I'm buying from has 3 days to give it to me. So I just give you an IOU, if you will, and eventually the magic of the stock market, the shares that come from him go to me, that go to you. But the caveat here is that if the guy that gave it to me is also a deviant and he doesn't have the shares, I just gave you shares that don't exist to give you the shares that don't exist. And then we have a 2008 stock market crash. So you get the idea, right? When everyone's just making up shit, yeah, it gets problematic. So, anyways, this doesn't really matter to us, but it definitely helps. It's going to help things. And they're talking about too that they're going to fix the problem with the data being different from a phone call and their websites and the reporting process. So it's going to become more accurate. So then that data should then move down to the retail investor. So we'll be able to get reliable short interest data because most of these companies are going to get to real time. So they'll be basically broadcasting the summary of all their bank accounts. So they'll have a real time rolling balance sheet instead of doing it once monthly. And then that way they're compliant. But then they're not going to be able to hide stuff, right? If we have access to real time data, we can just stare at it and we can see when they're doing things, right? So, anyways, it's going to change the game for us to at least be able to catch witchcraft, and it will limit the amount of witchcraft that can happen, but it's not going to change anything for us really. It makes no difference for us other than we're going to get some information to stare at, and it'll give YouTubers shit to talk about, you know, because that's what they do. They just talk about shit that doesn't matter that much. So getting stimulated by the stimmies. Anyways. Oh, cool. Oh, that's... Never mind. I was clicking on a website here, and it showed me my video that's currently playing. And I'm like, oh, it's suggesting my video to people. Then I realized it's just suggesting what I want to see. And they're showing me so I can feel good about myself. Thanks, YouTube. It worked. You bet. Sad. But anyways. Let me just catch up with the chat here. I lost some chocolate on the floor. I'm trying to find it before it melts. Where the hell did it go? Alright, just give me a second. I gotta crawl on the floor and find a chunko chocolate. Oh, chocolate, where art thou? How far can chocolate roll? Oh, geez. It went really far. It went under the couch about halfway. That chocolate has legs. Alright. No wonder I couldn't find it. So it moved about, for Americans, that would be about 8 inches. That's quite a distance. Okay. So, let's get to question and answer period here. Yeah, well, that was just a chunko chocolate. It wasn't the whole choco. So what's the question here? If you lose most of your money or the premium, you're talking about... So you're saying a put, a call. You picked both. So by putting a call, do you mean you're buying a call? Because you have to be kind of clear with your terminology. You can buy or write, or you can buy or sell. Those are the words, and it will be a call or a put. A put is a down direction, and a call is an up direction. And you can buy or write them. You can buy the contract or write the contract for either of the call or the put. So, okay, you want to buy a call. Wait, you just, no. Okay, you can buy a call, or you can write a call, pause, contract. So you're buying a call contract, or you're writing a call contract. Before we get the terminology here. But I presume you're going to buy a call, which means you're buying the contract of the call variety. If we want to go there. So with that, oh, yeah, well, that's fine. If that's the case, then you're basically paying an amount, which is basically your insurance, if you want to think of it that way. And then you're hoping that it goes up. So if it doesn't go to that number, you basically lose your insurance money. If it goes above that number, you make a profit. So you could also think of it as you have to pay to play. So if you want to buy the contract, you have to pay for the physical contract. And if it doesn't go over your number, it's worthless.
So you're out the cost to play, like a lotto ticket, right? If it goes over your number, then your lotto ticket makes money. And then the mentality behind it, or the reason behind it, to be more accurate, is that what you're buying is a contract to be able to purchase at a certain price. So the idea is that I know something bad's going to happen or something good is going to happen, and I want to lock in the price. So I pick a date that I can lock it in till, and I pick a price that I want to lock it in at. And so when things go the different direction, I'm either capitalizing on it or I'm insured against it, if you want to use options that way. Or I lose my money because I'm just gambling like a lotto ticket. Whichever way you're playing this. Options, as their name suggests, give you the option, not the obligation, to purchase or sell at a certain price. And they, air quote, give you options that stocks don't give you. So they're used mostly for hedging, but nowadays options are now used for just straight up hardcore gambling. Why trade stocks when you can trade cheaper options and go nuts and just gamble? But stocks are much safer because you only have to guess the direction, not the time. Yeah. Yes, options are usually restricted because usually you get options and stocks together, but they have different financial requirements. I got options, short selling, and something else all at the same time. Yeah. Yeah, it's all good. Yeah. I did my first option trade, 2 days ago? I read about them, I know about them, but the terminology my bank uses is not the same as the books. So it's like I don't want to press buttons and get it wrong. Because two types of options technically have unlimited loss. When you're writing an option, one of them has unlimited like cash loss, and the other one has unlimited realized gains loss. So it's like if I push this button and it's the wrong one, I got a 50% chance here. I'm getting screwed. So, anyways, but I got some clarification from the crowd here, and then I'm like, okay, am I doing it right? So now I'm a lot more confident with options. Now that I clarified a few things yesterday. Yeah. Yeah. Well, I've always liked options. The problem is there's a $60 commission for me to trade options. So that's probably a $120 commission, right? If I try to close it early, it probably costs me another 60. So it's like, fuck this. That's a lot of money, you know. So I don't think I'm going to trade options until I flip over to Interactive Brokers because their options are cheap. I think it's $1 a contract plus 25 cents maybe, or no, it'd be a percentage. $1 contract plus something percentage of the trade, where my TD I think is $1.25 a contract plus 2% of the trade. So it's like, Jesus, killing me here. How am I supposed to make any money? Well, options come with options. You have to guess direction and time. American style options, time doesn't matter too much, but you still have to get it somewhat right. European style options, you have to get it exactly right on the time. So you can't exercise them early. You're basically stuck with them to completion. So stocks are much better vehicles. If you know that the stock price is going to go up, then why buy options when you could just buy the stock and you wouldn't get nailed with the premium. Because you can buy, or you can get stocks through an option by letting them exercise, but you're still out the premium. But what the difference is that if you don't intend to exercise the options, a lot of options you can trade on incredibly high margin. So normally with stocks, you might be trading 100, let's say 100 shares is all you can afford. But with options, you can buy even more than that because your brokerage will lend you the equivalency. And so your money goes farther because you're only paying 25 cents a share, and you don't actually have the money to back up your total share. Now, my bank won't let me do that. I can only buy based on how much money I actually have in my account. But I'm sure, again, this is why these new rules are coming out. Bigger banks might just go, well, as long as I don't get caught, I'll buy $1 million worth. But they don't actually have that money in the account. If something goes wrong, they'll just transfer over the money. But they're definitely gambling with more than what they have. So that's what options are. That's why the big fish use options, because it lets them finagle more than stocks would. Because you can't buy stocks without the money, because you got to pay the guy on the other end. So, whereas options, you only have to pay the premium up front, but you have to pay the whole money at the end. Yeah. Yeah, you can do a covered call. So a covered call is essentially writing an option for the call. And then an uncovered call would just be pretty much illegal. So yeah, you get basically $500 a week, depending on the amount of shares you have. And then you're basically saying, the contract says that whoever is buying your contract is either going to pay you a certain price for your shares, or, so this is looking at it from the perspective of the seller, he's going to pay you a certain price for your shares, or he's going to give you a bunch of money and never take your shares. That's his options. If he takes your shares, you still get the bunch of money and you get paid for all your shares. So you either make $700 and don't lose your shares, or you make $700, lose your shares, but get paid for them at the price you agreed upon. So the only risk is that if it squeezes up and flies through the roof and you're still sitting there waiting to give the guy his shares, that could be problematic. So, like, I put in my call for $14. So if someone takes my shares for $14 and gives me all their money, I don't care. Because I know the stocks are going to come back down below 14. The second it hits 14, it's going to go back down because that's a huge resistance line. And if they don't take my shares because it never gets to 14, I made $800. So it works for me. So, I mean, $800 is not much. It's holding up $60,000, right? But I can't do anything right now. So it's like $800 for 2 weeks worth of waiting. So $400 a week for me. Or make $0. Okay. So options make sense. The person that buys a contract pays the premium. The premium goes directly to you. Yeah. Yeah, so Tom's probably right. The money goes to the clearinghouse, and then the clearinghouse gives you the money. And they take a little cut on both directions. It's the same thing with the stocks. You're buying from the market maker, the clearinghouse, but you're essentially buying from somebody else. but a dude in the middle takes a penny from both just to hand it to you. Yeah. As the market transaction cost. Blah, blah, blah. Because there's the spread, then there's actually the exchange fee in the background. Yeah. That's why that number right here never equals the same number, because there's a guy in the middle making a penny. So this is what you were wanting to buy at, and this is what you want to sell at. But there seems to be a penny difference here. Now that's because there's a guy in the middle that's only going to pay this much, and he's only going to give it away for this much. So he keeps the penny. Because you have to pay an extra penny to sell, or you have to pay an extra penny less to buy, whichever way you look at it, depending on if you're favoring this one or that one. Yep. Yes, so contracts have an expiry date. So you pick, they all expire on Fridays, and there's weeklies and monthlies. And you basically pick your expiry date, and all that is we agree that this contract is good till that date. And so if I was writing the contract for a price of 14, which is called the strike price, and I say, okay, for $14, I give you the right at any time to buy these shares at $14 from me. That's what I give you the right to do. But you're hoping that it goes over $14 so that you can buy them at 14 and sell them at market price. That's the gamble as an option trader. That's how you make money. Me as the writer, I don't want you to do that. I might not care if you do that, but my objective is to keep your money and my shares. So I'm hoping it never goes to 14. Now, you could, if you wanted to, you could exercise them, as far as I know, when they're out of the money, and you could basically pay extra dollars to get my shares at $14, even though the market is $9. I would get $14 worth for all my shares, and then I would go to the market and spend it. So either way, if the person's an idiot, as long as it doesn't go over 14, I win as the writer. If it goes over 14, I don't have the right to use my shares because I owe them to you. So I'm stuck watching the money go up, but I don't lose anything other than potential money. So not a problem. Yeah, you could do that, Warejar. I did mine 2 weeks out. So in a week, they were going to give me 7 cents. In 2 weeks, they were going to give me 18 cents per share. So by going out 2 weeks, I got 4 cents more per share. So I went with 2 weeks. So I figured by the end of the month, we weren't going to hit 14. So I got 9 more days or something left. But I figured if we even hit 14, like end of this week, we'll be back down below it. And the person could exercise at any time. So he's going to close his position at some point, and then I'll get my money, and then I can just buy back in when it goes back down. Yeah, exactly. I would never do a covered call, I think, for a lower price, because then they'll take your shares at a discount to you, and you would lose physical principal. Whereas I'm getting fully paid for all my shares, because my shares, I think, are at $13.60 now, because I've been averaging down. So I'm going to make a little bit more money, and I'm going to be out of the market, which is what I want to do. So the option made sense. It was a reasonable option. But it does mean my money is tied up for till the 30th. I have to have the shares in my account so that that guy can go wild with them. Whoever bought my thing. So all's good in the hood. Anyways, I always understood options. I just never really knew when to use them. And I was just a little hesitant in case I
lost $60,000 making a wrong trade. But a lot of people do, they buy calls because a lot of apps have gamified options as well. Like, what is it called? Binary trading. So you basically press buy or sell, and in the next minute, you make money or you lose money. And it's just like a game. But the idea is that if you can buy an option, and because options decay so quickly, they immediately pay out. And it's like a fast-moving stock. And you can buy options with like 1/100th of the cost of the stock, or 1/10th the cost of the stock. I think it's 100th. So then you can buy so much more. So then these little motions add up to big money, right? But the premium is what kills you. If you're paying, let's say, 20 cents a share, so the premium ends up being like $800 to make this gamble, right? As the writer, I get the $800, but as the gambler, you're out $800 on your money. So you better win that back, which would be, it depends on how much you're gambling. So in my case, it's 60,000. So it's essentially, I did the math, it's about 2%. So you have to see a 2% rise above the cost of the strike price. So it's like $13.50 or something you'd have to hit before you actually make your money. Because if you get over the strike price, you can get my shares, right? You're making money, but you still haven't made back your $800 in this case, right? So you actually have to exceed my price and then some. So yeah, it's a gamble. So you just got to figure out if it's worth it. I'm thinking I might do a call for $30, put it all on AMC, $30, and put it to December. But I'm thinking it's going to probably cost me like $500 to make that that call, right? But I can still gamble my money and play with it on the market. I just have to have all my money still there, like don't get a margin call in December. So I can still work the market while having an agreement that if it ever goes above 30, I get to buy the shares at 30. So if it goes up to like 40, 50, whatever, at any time, I can then take my shares off the market that have made money, and then I can buy or get more shares from exercising the contract. So I think there might be something in that, is do kind of like a power play like that. But I'm thinking my brokerage automatically holds the money in, I guess that's called lien? No, trust, brokerage, lien. Oh no, it's not escargot. It's in, oh fuck, I just had it. It's held in, sounds like escargot, but it's not. See if someone can guess it. When your money's held in frozen limbo. Escrow. Yeah, that's it. So it's going to escrow my money. I think they do that just so that I'm not in violation of financial laws. Yeah. Yeah. So, yeah, they'll just essentially put a lien on my account. Yeah. I could call them up and ask them about that, but because they may allow me, as long as I don't have to have physical cash in my account, but as long as my shares stay net positive, as long as I have the money to cover the gamble, it doesn't actually have to be cash. I don't think. So I'll have to ask them, but that's a quick way to get a margin call, and then they're going to close your contract early, making you lose $800. So I have to figure that one out.
But that's just Canadian banks. They're way too conservative, which is good. We don't run into the stuff that the US runs into, but it's bad because I can't gamble my life away and sell my kidneys like Americans can. So I want to take the risks. Let me gamble my life away. Let's see the broader market. Excuse me. Not bad. Good. Well, it looks like we basically recovered. So I lost track of time while talking there, but we just finished the market 50 seconds ago. So we had a last minute surge, but end of day, so we ran out. So it did make that S shape, but basically ran out of time before it could go anywhere with it. Not bad. And that explains it's the 30-minute push is what that was. And then here, S shape, collapsed. Cool. Yeah. Let's take a look at the actual post-market. Give me 1 second. No. So the actual post-market is 27. It hasn't moved yet. Switch over to viewer. There we go. So, okay, so it's gone up a penny. So this is the options. Yeah. So just for, I guess, you, Werejair, this is the option straddle or table. So this is the price that you agree to buy, sell, or allow someone to buy or sell. This is the sell. This is the buy. If you buy a call, you're going to be able to purchase at that price. If you buy a put, you're going to be able to sell at that price. And if you write a call, that person that you give it to has the ability to buy from you at that price. If you write a put, that person has the ability to sell to you at that price. And so the price is being the one in the middle here. So let's say me, $14, right? So if we look at this, this is change volume open interest. So 14, click, should take me to what I'm looking for. Okay, so if we go to 14, if we look at the expiry, that's for this week, it's this one here. I would get 3 cents for writing the call at 14. If I go out 2 weeks, I'd get 14 cents. So if I'm the person that's buying, I would have to pay 0.3 cents per share, minimum 100 shares, to the other guy for the luxury of this contract. As the writer, I would get 0.03 cents per share, minimum 100, for the luxury of having my stocks held in escrow till the end of the week. And then that price is based off a bunch of things, but you could just see it as a likelihood or a risk factor or an insurance cost, whatever you want. So, yep, see you, Howard, and everyone else. But does that make sense, Werejair? So if you wrote a covered call, you'd get paid for this price, let's say, at $14. You'd get paid 0.3 cents per every share, and Worst case scenario, they would take your shares off your hand for $14. So a covered call means you have the shares, and the price that you set is the price that they're going to have to pay if they choose to do so. So if you set it to $20 and your shares are only worth $14, they would pay you $20 if they choose to execute it. And they would give you they would give you 2 cents. Sure, Elon. So actually at this rate, you might as well set it to 20 because you're only going to get 2 cents. So you get 3 cents if you set it to 14, and the likelihood of 20 is even less. So you can do something like that, right? And then that's where your intelligence comes in with option trading. You're basically you weigh out, is it worth it? Like, if I can get 26 cents, do I want to do 14? Like, here's 15. This is almost double. So if you go out this far, you're almost getting double. It's not really worth it here, and this is worth even less. This is double the time. Each one of these is basically a week. So it's like, you got to weigh it out, right? So, does that make sense for you, Warejer? Or I'm just talking to the air right now? And for those that are just coming in here, I'm just talking about options, helping somebody understand them. Last call, Warejer. Oh, there you go. Yes, I just told you all about options and you friggin' left. Son of a bitch. Okay, yeah, see ya, backstop. Okay, that's fine. So, God damn it. Where did you go? At what time did you get up to smother your small children? Give her the sleepy pillow. Sleep. Shh. No tears, only dreams. So where did we leave off? So I don't have to recap the whole thing. 4 minutes ago. So I got to recap the whole thing. Okay. So sorry in advance for everyone that just sat through it, but the recap. So with an option, you pick a price. That's called the strike price. That is the price that a person will either buy or sell to you as the writer. Or if you're the buyer, you're going to be able to buy at or sell at that agreed price. So if we're going to talk about covered calls, that means you're the writer of a call and you have the shares in your pocket that you are offering to somebody at a certain price. So then he goes and says, okay, you write a call for $14. You have shares in your pocket that are worth currently $9, but you bought them at 14. Cool. It doesn't matter. So that guy there goes, yeah, I want the right, but not the obligation, to buy those shares from you at $14. You, as the writer, hope that it never gets there. If it does, you don't care. But if it goes over, you still don't care, but you're losing out on potential profits. He can choose to take them from you at $14, but he's not going to do it unless it's over $14, so that he can then sell them back to the market at a premium, netting the difference. And that's the game for modern options. So if you have 100 shares at $14, that would be one option contract. If you have 1,000 shares, that's 10 option contracts. Each option contracts is 100. It does not automatically trigger. The only time it automatically triggers is if it runs out to the end. It will automatically take your shares and give it to him if they are expiring valuable. Because that stops, apparently short sellers would buy last minute calls to drive down the price or something. So they made it so that you couldn't just buy calls and let them expire worthless. Yeah. Now, I'm not 100% sure because some books say you can and some people say you can't, but you can exercise your option contract at any time, including when you would lose money. So if you chose to, you could pay the other person. It's not really paying the other person, but you could think of it as you could pay the other person for their shares, and they would have to give you their shares, but you'd be paying $14 when the market is $9. So you'd be stupid, but I would then end up with all this money, and you would end up with my share. And then you would be out. You'd be trading spaces, and that guy would then be holding 40% losses, right? Alternatively, so this is where options get complicated, I can use an option at a different price to provide the shares that I have to give to somebody. And then this is called multi-leg. So I can actually use a contract with somebody else for a different price. So let's say we're trading wheat. You want to buy wheat from me from $10. I say, okay, we agree upon $10. But some other guy says, for the same date, I'll give it to you for $9. So I take the $9 contract and I give it to that guy. So I keep the dollar, and then technically those two people are joined. So he's now getting the $9 contract, the results of the $9 contract, because that guy's on the hook to me and I'm on the hook to him, which means the first guy is on the hook to the last guy. I'm just in the middle, and I keep the dollar difference. And then that's your advanced plays with options. Because you have a contract that's stuck in stone, but that doesn't stop you from fidangling and finding something, so you don't have to risk your shares. You can risk a contract, right? Now, of course, you'd still have to pay a premium to open this contract with the other guy, and that's the reason why you don't just do this all the time. But if the difference is so great, paying that premium may not matter. And then you get into this cool, crazy stuff, which is well outside of the scope of this channel. So if it goes out to the ether, no one purchases it, that person loses their premium, and the writer goes on his merry way. Yeah, if it goes over 14, you get the cash, and he gets the shares. If he doesn't press the button earlier. If he presses the button earlier, he gets your shares at any time he wants them. So it's basically just a contract that you as the writer are on the hook till a certain time. And what he's going to try to do as the buyer is that he wants to wait to the last minute for it to be in the green to buy them at a higher price, so that when he sells them to the market, he bought them at 14 and then he immediately sells them at the market for 25, right? But if that never happens, he's not going to go buy them for 14 if they're $9 on the market, because he's going to just lose a fuck ton of money. So he lets the contract expire worthless because he doesn't need it. He could have treated it as insurance, or maybe he's gambling. It doesn't matter. But you as the writer, nothing happens, right? So, and the other thing to keep in mind is you get paid that premium immediately. As soon as the contract passes, you as the writer get the premium. So you can invest that premium, and you can actually have that premium ride all the way up, right? But that premium's only about 2%. Immediately 2%, let's say. But when it rides up, you're getting 30 or whatever percent returns, right? If we go from 9 to 14, that's about 30 something percent on that $800 or that $1,000. Also, your shares are gaining value all the way back, but you're going to have to hand them to that guy. But if it goes all the way up and stops, let's say at 1350, and he expires worthless, you just got $800 more shares, brought them all the way up, and now they're sitting right beside your now more valuable stocks. And then that is the real benefit to me, at least. It allows you to get free money, if you will, at risk of nothing except for maybe future potential profit. So it makes a lot of sense. And you can, of course, do it in the opposite direction. You can write a put where you have to have cash in your account, but you're hoping it goes down. If it doesn't go down, then this guy gets to sell to you at a discount, and then you have to pay him at the inflated price. So you agree that he's allowed to sell to you at $25. It goes down to $10. You still have to give him $25 per share worth of cash, and he's going to hand you a bunch of shares, and then you're going to cry because they're half value, right? So that's a high risk of loss when you write a put option, whereas you can technically have infinite loss, but the loss on a written call option is just unmaterialized. All you can be is out your shares, but you're still going to get handed cash, so you don't lose your principal. So nothing to worry about. Yep. So when you do shares, you're not actually giving money to another person. The market maker takes your money, and so the seller gives to the market maker, and then the market maker takes those shares and takes the money from the buyer or the seller, or both. Actually, I think it's both. So the spread is divided in half, and he takes half from the buyer and half from the seller, and he trades the shares. But if you want 100 shares and the seller has 1,000, the 1,000 goes to the market maker, and he just takes 100 of it and gives it to you, and then takes the transaction cost, right? So you're not actually trading person to person. In a real market, that's the case, but in a stock market, there's always a guy in the middle, generally, until he runs out of shares. In an option, there's a middleman as well, and that's the market. The market is doing the middleman, but the difference with an option contract is you're on the hook for a certain period of time. When you buy shares, your obligation is over. When you sell shares, your obligation is over. Technically, there's 3 days of settling, but it's over. You had an agreement with the market maker. You paid the money. You got the shares. It's done. You can go to sleep for 400 years. It's over. But an option, it's got a time limit. Yeah. So you're going to write an option, and you're going to post it to the market. And someone's going to pick it up. The market maker might pick it up, but options may not execute because the market maker won't pick up shitty options. Whereas I think they're obligated to pick up shitty shares. It's part of the price of doing business. They have to execute all the orders, but options are a gamble. So options are not like shares. Shares, whenever you buy a share and sell a share, it's the absolute price of that company. So it's at its top of the line value, right? It may lose value in the future, but that is exactly what the company is worth without a shadow of a doubt that very second. And so that's cool. But with options, because you're picking a price, that price can be way out to lunch. And if somebody has to pick up all the stupid ones, people would just set it's going to be $1 million in a week, and you just make infinite money, right? So I think options have to have a buyer, and it's going to be a human. Oh, it's probably going to be a robot, but I mean, there has to be a buyer before it executes. If no one picks it up, it just sits there. So I'm told. Mine executed, I think Howard's, he put his in at 12 o'clock and it executed at 3 p.m. I put mine in at, I think, 2 p.m. and it executed at 3 p.m. Yeah, I'm currently up $780 because I wrote the option. Oh, you don't get any money? No. There's no money if it doesn't execute because nobody picked it up. But you're also not on the hook. So, yeah. So there probably is some risk where you write an option, which puts you on the hook because you have to have your shares there, right? And then no one takes it and you've wasted half a day, right? So I think there's probably some leeway. Like as soon as the person takes your option contract, then you could exit the stock market to make sure that your shares are there. But I think legally, you just have to have the shares there when the person wants to execute. So you have to have the ability, either cash or equivalency, to be able to satisfy that guy. But you don't actually have to have the shares there, I don't think. You just have to have enough cash that when he clicks go, your brokerage can make it happen. At least I think that's how it works. Because there's a difference between the stock market we play on, because we're playing through a brokerage, and then the people that are the brokerage, because they get to do bigger things because, you know, they can do stuff that breaks the law, but they're supposed to follow the law, right? Whereas the banks and what we play in won't let us break the law because then the banks would be breaking the law, right? So that we get like a sandbox mode. So we're not allowed to do all the legal but not great because we would do it and then the bank would go under. Yeah. So the reason you would do that, right, is because, ow, just twisted my toe. Let's take, so if we're looking at this, let's look at 14. So if we go and find 14, right? So yesterday it was going up, right? What the hell? Spinach means cannabis? No, spinach doesn't mean cannabis. Spinach means spinach and Popeye. Don't give me that shit. What the hell? Why is it? Give me 14. We're waiting on an ad to not load. Okay. So today it went down 60%. But previously it was, yesterday, let's say, it was 5 cents. So 0.05. And let's say we wanted to buy $60,000 worth. So let's say we pay $4,000. So we would pay $200 for the gamble that it would go over $14. And then when it goes over $14, we would start making whatever the equivalency of 4,000 shares would be like. So if we go up $1, we would make $4,000, right? So I pay $200, and if it ends up at $16, I would make, well, let's do the math here. I would make 800 or 8,000 minus 200. So I'd make $7,800 if it goes to 16 with a $200 gamble. That's why people would do it, right? And if I'm wrong, so this is the insurance part of it. Instead of buying the shares and riding them all the way up, right? I only paid $200. That's all I risked. If it crashes, I'm out $200. If I bought the shares and it crashes, I'm out how many percents it crashes, right? So you're limiting your risk at the cost of $200. Now, normally it's a lot more than $200, but that's the hedge, right? That's the benefit of options. Yes. So when you think the market is going to plummet, if it's too risky, instead of not playing, you can pay insurance money and still play. But the reason you don't, then the question is, well, why don't you just buy options all the time? Because that fucking $200 adds up. That's a hell of a large commission, right? But that's the price you're paying to have zero risk. If it goes the wrong way, no risk, but you're still out $200. So, yeah. But usually the price is a lot higher. Like, let's say, which one is this one? 24. So if we say this time, no, if we say December this year, that it's going to be $14. I'll give it to you for $14, December this year. You would be paying me 2.26. So you'd be paying me $1.26 extra per share times 400. So I would get $9,000 in premium payments for $60,000 worth of shares. But you're paying $9,000 up front to lock in $14 in December. So I get $9,000 right now. And if it goes over $14 at any time during the rest of this year, you're making money and I have to give you the shares. So if it's a sure bet, if you will, that's an easy, $9,000. But that also means I can't make any money for the rest of the year. But when you're a big fish and you don't care and whatever, options make sense in that case. But I'm getting a killing off of that, right? But if it doesn't go to 14, right, I've just made almost $10,000 and you made nothing, right? So there's a balance, right? But I'm almost tempted because I think it's going to go to 28. It's probably safe to do a $28 to December. And if it goes over, I won't feel bad because it'll go back down. And if it doesn't, I'm up, let's say, somewhere around $9,000. But I can easily make $9,000 on the stock market in a week. So why lock up my money till December, right? So it depends on which way you're doing it. But let's say you're doing calls, right? So if it hits the strike price, the person chooses to exercise. So he can exercise at any time, but let's say he exercises when it's over 14. You're going to hand him the shares, and then he will liquefy the shares to the market for profit. Yes. But you don't get that cash. So you have your shares in a bucket, right? And they're worth $9 right now. If they go to 14 and you're giving them away, technically they moved up to $14, but that's now what that guy has to deal with. It's no longer your problem. You just have 4,000 shares, right? So they're worth $9 right now, but you paid 14. The market doesn't care. You still have 4,000 shares. He's going to pay you $14 for the shares. He can buy them now or he can buy them later, but he's hoping he buys them when they pass 14 so that when he gets them, they're not worth $9. They're worth 20 or 5 or 15, and then he can sell them for the dollar or $5 profit. That's the idea. But to you, it doesn't matter because you can't profit off of the price change because you're going to hand them over. But if they go really close to 14, right, while you're waiting for them to come back in price, but they don't make it, then you don't end up handing them over and your stocks have gone up in price, right? So that's the linchpin. Yep. Yes, you don't lose your principal. Yes, exactly. He doesn't pay you a cent over 14. That's his gamble. And you as the writer are guaranteed to get all your money for all your shares. if you paid 14 or whatever price. You can set it higher than you paid. You could say $20, right? And you bought those shares at $5. But you're like, I'm not going to part with them until it's $20. So he'll pay you $20, but he's only going to do that if it's 21 or 22, right? So you've lost out on those $2 worth of gains, right? But that's the gamble. Yeah, exactly. So that's if you're a writer. If you're a call, what you want to do is you want to get in when the stock market's going down, when people think it's never going to go to 14, but you know it's going to go to 14. So you wait until it's really bad, like right now, and then you go, haha, these guys are idiots. So you pay $200 or $400 or $10,000 and you buy up all the calls you can get, right? With all the money you got. And then all of a sudden, it's $14 tomorrow. And you just fucking walk all the way over to the bank and you shoot money at the teller. And there's hookers and cocaine for everyone, right? So that's the other way around, right? Because options allow you to maximize your gambling, per se. My bank won't let me do it, but I know a lot of people that can. So you can buy, let's say you only have $1,000, but it's only $200 in premiums, right? So you then spend $1,000, you blow all your money on the premium, but you end up buying like, I don't know, 30, 40 times what you could have normally bought on the market. So now you have 40 times the purchasing power, which means if you're right, you end up getting 40 times, because also remember, if you're wrong, you lose $1,000, right? You're already out $1,000. But if you're right, you're going to pay for the shares, right, from that guy, but they're already worth more than they are on the market. So you can just get the shares from him, sell them, and then pay him, right? You see how that works? So you can technically just gamble to the hilt, because as long as you're right, you will always have more money to pay the guy because you're using his shares to pay him. And that's the party, right? You can just go to town on those. And my bank won't let me do that, but that's the game. So yeah, I lose $1 per contract. It shouldn't be $1 per share. It should be $1 per contract, which is 100 shares, and then a percentage. Because it's a contract times 100, right? So you're not putting in your shares into that little box. You're putting divided by 100 into that little box. Yep. So that's for a call. Now a put is the opposite. So with a put, it gives me the right to sell my shares at a certain price. So say I want to get out of the market, and I say, okay, look, I think in the winter, wheat is going to be worth 10 cents because there's going to be a really good summer and we're going to have too much wheat in the winter. But I can't afford to sell all my wheat at 10 cents. I'll go bankrupt. I need at least $10 to make it through my operational costs, right? Because the market's going to be flooded and everyone's going to go to hell. So I say to you, okay, look, I'm going to give you, I want to pay you a certain amount of money for the right to sell you my wheat for $10. And then you go, oh, $10, man, it's currently 20. That's stupid. But okay, because if it stays at 20, you'll just sell to the market, right? But if it tanks and it goes below 10, then all of a sudden your shares are worth 10 cents, or your wheat is worth 10 cents. But now you get the right to sell it for 10. And that person there is fucked because he has to pay out the contract, right? And so that's the other way around. So with puts, when you're buying them, you're hoping that it will go down in price so that you can sell higher than market price. And as the writer of a put, you're hoping that it doesn't meet that price, or you're going to have to pay that guy the inflated price. Now, in a good world, you already have that money on standby. So you have all that money that you said you're going to buy his wheat. He says, okay, I'm going to sell 1,000 wheats. So I'm going to buy 10 contracts at 100 each. So 1,000 wheats. And then I put that money aside, right? And then if he comes a call in and says, okay, look, I want to sell my wheat to you, there's my money. In an imperfect world, which is what normally happens, I take his money, I gamble it, and I do stuff with my money. And then when he comes a calling, I go, shit, I sell my shares or whatever to get the money he wants, and I hand it to him. And that's what big banks and all that stuff do. They'll take your premiums and work it on the market because they have all year to play with your premium before they got to pay out in December, right? So that's the game. So yeah. Anyways, it's options give you options. They're a good thing. Now, if you want to learn more, the next thing to learn about is the multi-step patterns. So a multi-step pattern, you have options that cover options, and in that case, you can both bet up and down. So if you buy a call and buy a put, right? You're like, wow, I could bet both ways, and I win regardless of direction, right? Because if it goes up, my call makes money. If it goes up, my put is limited to a certain loss, no greater, right? So I'm out the insurance money on my put, but I'm winning on my call, right? And then vice versa. But what you have to keep in mind is that you paid insurance for both ways. So you're out 2% both directions. So if it swings violently, you're fine. If it doesn't move at all, you've just got nailed twice, right? So in that case, betting both directions would be good if you know the stock's going to move in an insane amount, but you don't know when or where. Or sorry, you know when, but you don't know how. So let's say we're at a wedge, right? Wedge becomes 50-50. It's a huge wedge, a big announcement, earnings tomorrow, right? So earnings would actually be a good time to do that. You say, okay, I'll buy above and below the strike at earnings. And then all of a sudden it jumps 20% tomorrow. Adam shoots up a school and it goes down 30%. You're covered, right? Regardless, as long as it doesn't go flat. But you know it won't go flat because you know there's some triggering event just around the corner, right? And then you can do the other way. So they're both facing inwards. So you do a put and or you write a call and you write a put. And you basically are now betting inwards. I think I got that right. So now, as long as it stays in the middle, you make money. Because it will stay under the call and it will stay above the put. And then that way you can get double the insurance money on a sideways stock. Yeah. And then you can have half and half of another so that if it goes the wrong way, you keep the insurance money, but you use the other guy to pay off the stock that you now owe. So as it's going down, let's say you write a put and you're losing money as it goes down, right? But you wrote a put and you bought a put at the same time. So as it goes down, you're using the put you bought to pay off the written one. But because you bought that put at a cheaper price, as it's tanking, then basically you owe that guy the shares that you're going to take from that cheaper put, and you keep the difference. Yeah. And that's what a lot of people do. So say I have a written put and this guy pays me 20 cents premium, right? But then I wait because there's a time decay, right? So I wait. Then I say, okay, look, it's getting kind of risky and I think it's going to go down and I'm going to have to pay this guy. So before it goes down, I pay insurance to myself by buying someone else's written put at 10 cents, 12 cents, and he paid me 22. Now I'm technically, again, out of the contract. He pays me, I pay him. And I keep that difference, right? So I use a little bit of my original premium that I got from that guy to pay the premium for the other guy. But because it's half, I still net the half of the premium. Boom, instant $500. And that's what the big banks do. That's how they make money on the, and that's why they love options. So, yeah. Anyways, I think I might start doing a lot of. I like short selling, but you can't short sell AMC. My bank won't let me because they're not holding any AMC. I can't loan from them. So what I think I'm going to start doing is I'm going to start buying puts for AMC. It's not good to bet against AMC because AMC is a growth stock, but as a result, those puts should be cheap. But when we have like, super risky news, or let's say we're going up to 14, right? As soon as we get close to 14, I could buy a put at, or say we're at 10, I could buy a put at 14, right? And then it would go, and when I'd buy a call now to 14. When we go over 14, I buy a put at 14, and because I know it's coming back, right? And people will be like, no, it's not coming back. So they're like, that's a stupid bet. But then when it crashes because we went up too high too quick, I make my money, right? The downside is that I would have to have these bets all terminate at a certain time, right? But I can exercise at any time. So all I have to do is have that time frame cross before the expiry time once, as long as it crosses once. So if I bought that put the second we went over 14, or even if I bought it before it was over 14, but I'd pay a premium because the put's in the money and I'd pay a premium. So I wouldn't do that. But as soon as it passes, I could quickly buy that put. And then I have that entire time for it to crash. So anyways, that's options in a nutshell. Yeah. So I've always known this, but I just haven't, I couldn't get the terminology. So I don't know about your bank, but mine says it's buy to cover, buy to open. It's buy to open cover, sell to close, sell to cover. So I'm like, what the hell's a close and what's a cover, right? I still don't know what that is. But the buy to open, that's a written call. So you're opening with the shares in your thing. So it's a covered call. Buy to open is you're buying the contract to open the agreement. Sell to close, I presume, is you're selling the contract to the market to get out of it. And the sell to cover is you're selling your shares for cash, or you're selling the contract for cash to close it. Yeah. But anyways, so that's, I think, you're cashing in. Yeah. Anyways. Yeah. Sell to... No. It's buy to open is a covered call. It's buy to open. Yeah. And it says buy to open covered. That's how you know it's the right one. Yeah. Yeah, it was confusing the crap to me because I'm like, I'm technically writing, right? But no, you're technically buying from the market maker the contract, which then someone buys or enters the agreement with you. Like, it fucking confused me. I'm pretty sure I got the right one. I better have the right one. I'm making money right now, so I think I have the right one. Sorry, emails. Yeah. So, anyways, I think I got the right one because everybody was telling me I got the right one. But yeah, no, the terminology was confusing, which is why I've always avoided it. Because it's like, But you'll notice, like in my terminal, there's a switch between calls and puts. So you have 4 choices for a call. So you know you're not writing a put. So it's you can buy, sell, and then one is to buy and sell for the buyer, and one is to buy and sell for the writer, both in the call department. So it's like, oh my god, there's too many uses of the word buy. It's fucking ridiculous. So anyways, yeah, so I'm currently up $140 because as my option becomes more and more worthless, I get more and more money technically. And then when the whole thing is over, I'm technically up my premium. I think is how it works. Because right now, if I was to, because the way they do it is that you paid $700, right? To someone paid you $700 to write the contract. If you want out, you need to go find the same contract off the market, but it's declined in price, right, over time. So if I go and buy from the market right this instant, it's not open, but let's say it was, I would have to pay 14 cents, right? So if I wanted to buy, yeah, right here. This is my guy right here. Okay? So if I was to buy a contract right now, it would cost me 14 cents. If I was to write the contract, I'd get paid 14 cents, right? But when I wrote the contract yesterday, it was 18 cents, and someone paid me 18 cents. So if I wanted to get out right now, I would have to buy for 14 cents. But again, I keep that 4 cents difference. So I kept that extra 4 cents from that other guy, and I used the other guy's money to buy myself out, which means I'm still up $140. So he gave me $700, and it will cost me $560 to get out of the market. So I keep a difference of $140. And that's the process, right? So you can think of it as just selling back to the market, but really what's happening is you're paying somebody else to take your place to fulfill the contract. Or you can think of it as you're still going to fulfill the contract, but someone else is going to pay you to pay him, right? Because that's why it's a chain, an option chain. That's not the right terminology, but that's the idea, right? So the time decay works in your favor when you're the writer. As the buyer, the time decay is against you. It's running you to zero. And as soon as it gets away from zero, you're the winner. But as the buyer, you could at any time close out your position worthless, or demand the shares and pay extra price, or sell at a substandard price. So you're buying at a substandard price or selling at a substandard price as the buyers of a put or a call. Obviously, that's not a good idea, but it's an option to my knowledge. So that's basically the whole thing. Two sides, writers and buyers, and you just pick a direction and off you go. Not that difficult. Yeah. Now we should start the masterclass on advanced, the fuck are they called? Financial derivatives. So an option is a derivative, something that derives its price from something else. And in this case, the share price. The stock is technically a derivative, but they don't count it as it because the stock is a physical piece of paper-esque that's based off of a percentage divided by the market cap of the company multiplied by the hype, the demand, what people are willing to pay. But that's the core. But it is technically derived from something. It's derived from the value of the company divided by the outstanding shares. Or sorry, the total shares. But they just count shares as the core, and the derivative is options. But you can go even further. So mortgages are a thing, but you can derive off a mortgage or derive off a house. And so you can have things that are made up, like Bitcoin, and they derive value from something. And then you get into crazy shit. But that's where you can make real money, because you got stuff that is made up, or it's based off of something like gold, right? And you can then derive from it. What's a good derivative? Shit. There's some derivatives with oil that are really good, because oil is the core price, and then there's stuff that's made with oil, which derives its price from the base cost of oil, right? And then there's stuff that derives its price off the cost of oil. And so then you can have made up shit. Those are financial derivatives. Or you could just play the game because you know that the oil price will cascade down the line. And so you can, as soon as oil shows weakness or strength, you know that's going to cascade 6 months down the line to somebody else. So you know you can make a bet, an option call 6 months out. Oh, I think futures are derivatives. They're derived off the current price. Yeah, futures are derivatives, I think. But yeah, you can do stuff like that. So that's kind of I think I would say is that's the highest level game, is maybe commodity traders. But that's all, personal opinion. Some people think financial currency traders are the alphas. I like commodities. I like there's human element. There's demand. They're real. People will consume it. It has a time frame, right? But anyways, that's a little bit of a side story. So, is there anything else you need, Jer? I got a date with Stella Laris. I got some Xenos to purge. Maybe I should get some food into me. I've just been eating nothing but chocolate all day. But yeah, you'd only get 2 cents. So let's see here. If you were to write a covered call, and let's say you have 1,000 shares, you'd get $20. So if you had 1,000 shares and you wrote this contract for 10 contracts, you get $20. So it's 10 times this, or this times your total shares, whichever way you want to look at it. Yeah, no problem. Do you have any questions, Liam, while we're on the topic of options? Since now I can... this is 14. 14 is probably the best best price, I would say. So we could look at... let's get rid of this. So if we look at 14. So this is this week that's ending. So you could set it to $12.50 for an extra cent, right? If you go lower, so you're going to get, let's say 14 is the safe one, so you're going to get 3, right? But you could also set it to $13.50 for 3. So that's actually a good value, because these guys are also 3, but this is a higher number. So as a writer, you want to write as high as possible, right? So like this is good value right here too, 17 and 16.50, because 15 and 16 only give you a cent. But if you go 50 cents lower, so you're actually better off writing 15. Actually, yeah, write 15, you'd get an extra cent over 14, right? So, there's benefit to that. Or go even higher if you don't want to. 14 makes no sense, right? Because you're getting 2 cents. If you're going to pay 2 cents, you might as well go as high as possible, and you can set it to $25. Or you can set it to $19, $18, right? You see how that works? So for the price difference, right? So actually, if you really want no risk, right, that is pretty good. $20 for you'll get $20 and Bob's your uncle, right? Because the other ones that will actually get you any money start at 13. And the likelihood of hitting 13 is much higher than the equally paying $20. So you either set it to 20 or you set it under 1350. And so this is for Friday. Yes, this is all for Friday. So this is April 23rd. And then this coming Friday. And then these are all the prices. And then this number right here is what you would buy or sell a call at. And then this number here is what you would buy or sell a put at. So you just look at the chart this way, or you look at the chart this way. But it goes 1, 2, 3, 4, 1, 2, 3, 4. So the charts aren't like symmetrical. They're going this way and then this way, if you're following my highlighting. So price, difference, whatever. Price, difference, percentage. I think it's how many people have it, how many people are offering it, or something like that. What is this? Volume and interest. Okay, so this is how many people want it and how many people have got it. Right? So this one's pretty full up. But this one here, there's 4,700 and only 3,393 have moved on it, which means if you wanted to buy one, there would be one for you. In this case, I think that's how that works. Yeah, we're like this one is all sold up. There was 8 made, 8 taken. Yeah. No. So how many shares do you have? Let's put this in perspective, right? If you have only 1,000 shares, that's $20. I have 4,000 shares, right? And we're also 2 days into the week, right? The week's half over, right? So let's say yesterday, right? Yesterday, let's say you wanted to do 14 yesterday. You would have got 5 cents. So you see this over half. It declined by 60% today, right? So yesterday it was 0.5. So times 1,100. So you would get $55 for your 1,500. Oh, yes. It constantly goes down, and it goes down a lot. So there's a time decay, right? The farther you're out, the less the decay affects you. As you get closer and closer and closer to the point, the decay gets more and more pronounced. People will talk about intrinsic value. There's a whole bunch of stuff, but you can just think of it as there's a time decay. It decays to zero, to worthless, right? As a writer, I just made 60%. Because if I had to cover or get out, it's now 60% cheaper for me to get out, right? Yes. So if you do a longer strike time, right, he pays more because he has more chance, right? You get more because you have more risk, right? So you're paid for the risk and he is paying for the chance. So it comes out in the wash, right? So that's why I did 2 weeks. I looked at this one, and when I was going to do 14, right? On Monday, at the time I was looking at it, I would have got 7, right? So it went down from 5 this morning to 2. But it was 7 when I looked at it yesterday. So if it was 7, you would have got times 1,100. You would have got $77. I should have been able to do that. So if you would have bought the same time as me, you would have got $77. So I went to the other week, right? Let's look at a week from now. So I went to the other week, and the other week, 14 is now 14. I got it for 18. I could have got it for 25, but I missed that window. So for, let's say, 25 cents, right, times your money, you would have got $275. So 100 and something a week, because I can't do math, divided by 2. $137 a week to wait 2 weeks. You see how that works? So, if much better than that, yeah. But now, if you were to buy that contract, right, or write that contract, there's such a limited amount of time. So, it's kind of a game because the guy that's buying it has so little time, so he pays so little in the premium. But then that's the value because he pays so little, the rewards are so great, right? Whereas if he buys further out, he has more time and more chance and it's better financially, but then he pays more, right? So the farther you go out, the more it's like insurance, and the closer you get to the end, the more it's like gambling. Because it's low amount, but it's all or nothing, and you win big. When you're further out, you got plenty of time, and it's more like hedging. So, yeah, it makes sense. When you put it into practical terms, it makes sense. Options are not scary or complicated. The hard part is just fucking wrapping your head around this stupid chart. This chart is confusing as fuck. Because, you're like, what am I looking at, right? And they don't usually explain the fact that when it hits $14, you actually get your full money's worth, right? They pay you. It's not like there's some option contract where the shares don't exchange hands and you end up, getting $900, but you lose all your shares, right? Like, that's a horrible gamble. I get $900, but if the guy's right, I lose $60,000 worth of shares. That would be stupid. So it's a lot less menacing than that. That's what I thought options were when I first got started. I thought when the guy wins, the other side wins, he gets all those shares for 20 cents a piece. No, he gets all those shares for 20 cents plus the strike price. Or you can think of it as he paid the premium and now he has to pay for the product. Whichever way you want to look at it. I like to think of it the other way, where you pay the premium and then at a later date, you either buy the shares and you either lose money or make money on them. Or you don't buy the shares, but you're already out that premium ages ago, right? But most people, when they talk about options, they'll just conflate the two, merge them together, and they'll say, when you go to purchase, it's premium, like the price you see here, 14, times the amount of shares, and that's the total cost. And it's like, well, yeah, okay, that's if you purchase. But if you don't purchase, then you're just out that number times total shares. And that was the premium that happened at the start of the week or months ago. And that's it. It's pretty straightforward. Oh, yeah, man. So there is a way, and I still haven't quite figured it out, but there is a way to buy shares at a discount, right? So if you think the shares are worth $9, right? You can technically bet for $9, pay the premium, right? And then you can buy the shares for $9. But what stops you from doing that, right? So this is the price right now, $9, right? So these are ones that are out of the money and out of the money. So these are puts and these are calls. So here at $9, if I was to buy one right at the money, so I'm saying I would like the ability to buy from you. It's $9.28. I want to buy from you for $9. There'll be $28 built into this price. So 0.62, and then we my plus 50. Oh, no, I got that wrong. 0.82 minus 28. Oh shit. 0.82 minus 0.28. I think this is the way to do it. So then that's 54 cents. So if it goes up to 9.50, it's 62 cents. If it goes to 9, it's 52 cents. But there's a 28-cent premium attached to it. This one would have $1.28, or no, $50 cents plus 28. So plus 50 cents, that brings us up to $1.04 plus 0.28. So that's $1.32. This one here. I think I got that right. Oh, no. You don't add the 28 because of the... No, you do. Hold on. It's 850 minus 928. It's 78 cents. So if we go back here, $1.10 minus 0.78. So that's 32. So this one was 52. This one is 32. But that's the chance, right? But the chance gets swamped by the intrinsic value because you're getting it for cheaper than the market, right? So you're still losing then the chance price, if you will, in the premium. So I'm losing 32 cents a share here, or 22 cents a share here, or whatever. So you can technically buy at a cool discount price if you don't mind losing 10 cents a share. But why not just buy it from the fucking market then, right? But what you could do is if you think it's going to go down but you're not sure, you could place a bet a little bit further out here, and then that protects you against loss, because as soon as it goes past 750, you're making money on your bet, because you're able to buy for 750 even though the share price is now $4 or whatever, right? Oh no, wait, that's the other way around. Sorry, that's what you do on a put. That would be this guy. Why would you buy a call in the money? You buy the call in the money so that if it goes up, you make money. If it goes down, you can still buy at the inflated price. No, so you buy a call in the money because you need it at that price, so that if it goes up, you're hedged against the price going up, because you may not be able to afford the price going up. Okay, sorry. This one's a weird one because you're buying it in the money. But you do it in this case because let's say I have 20 grand to buy a car. So I say, okay, let's lock in for $20. And then it skyrockets, right? And then it's like, whoa, well, at least I can still buy at $20 because I've locked it in for that price. Now, I could have bought a share and rode it all the way up, right? But it covers me against a price jump because I still want those shares. I still want that car, right? So I'm going to buy no matter what, but it protects me against if it goes up. Because maybe I can't buy right now, but I'll have the money later, right? So you lock it in. That's when you do it that way, right? But normally you wouldn't do that because that 32 cents of punishment, right, fundamentally brings this up a bit. An extra 32 cents off the strike price. So you need 32 cents of movement to make this correct. But if it goes up further, then you're making money as it goes up on this, right? Yeah, I think that's right. So you lose money out front, but then you end up making money as it goes up. So it protects you against price movement in this direction. If you buy right at the price, then you're hoping it goes up and you make money. Whereas if you buy here, you already paid, so it can fluctuate. And as long as it ends up at the price you just bought at, the $9 or higher, you made money. If it goes below, you're out the premium plus the additional loss of 9 to 750, if you follow that logic. Yeah. So if you think it's going to go down, you would just buy these guys. But that's another way of looking at options. If you buy them in the blue areas, you're trying to protect yourself against movement in the direction, the negative direction, because you're afraid, or positive direction for this one, because you're afraid of it for some reason. If you buy in the white, you're hoping it comes to you. You're hoping it goes down to you, and you hope it goes up to you. Yeah. So these ones all come with cost because they have intrinsic price. They have intrinsic value. If I sell below market price, I lose money. If I sell above market price, which is this one, you lose money. So of course that has to be baked into the price. Because if not, I would just be, oh yeah, sure, I'll sell to you for $50. Here you go. And I buy them for $9, right? So anyways, that's the whole thing. So you just have to sit down and figure out what makes sense to you at this current market on this current, and it gives you tons of flexibility, right? So options are really where the elites shine because you can do all this funky shit. Whereas stocks, you can really just go up and down. Stocks are more about patterns and timing and shapes. Options are more about chance. But I think if you don't understand stocks, then you really lose out on options. Because you need to look at the stock to know what it's going to do, and then you can trade the options if you're going to go that way. So, anyways, I think that covers everything there is to know about stocks and option tradings. If you have any questions, I'll be here tomorrow. So, yeah, good times. We're all good. Time to go and close this stream down. All right, no problem. 7 hours and 42 minutes. Woo. That's a long haul. All right. See y'all.